First gain of Christmas, Velvet gave to me. A candle closed strong on that S&P. Second gain came quick, that liquidity flip. Sent a car to trade, now he's riding the ship. Third gain gold, no coal in sight. Options wrapped tight like the tree tonight. Fourth gain dripping like a tinsel stack. Cash flow slayed, never looking back. 12 gains gleaming all in a row. Baby, that's the kind of cheer only bulls know. Your kiss feel like a high yield glow, turning red to green under Christmas snow. The 12 gains of Christmas, we ring that bell. Every trade I touch, you're doing well. Velvet Kohrs blessing every clientele. That's a holiday head you can't sell. Ho, ho, cash no falling, fireplace burn, 12 gains deep. It's my turn, the 12 games of Christmas. Profits churn, Santa playing catch up, he'll learn. Woo! Fifth gain shining like a golden chain. 6 through 9, all pure champagne. 10th gain hit like an angel choir. 11 caught flight, pure by a fire. 12th gain came with a bow on top. Velvet on the mic, making markets pop. Yeah, yeah. Now listen here, ladies. Christmas ain't just cookies and snow. It's conviction and a little FOMO. Some men bring gifts, I bring growth. Some light candles, I become the glow. So when you hear them bells on the 12th night ring, just know Velvet made the chart sing. The 12 games of Christmas, we own that way. Velvet Kohrs the name the markets crave. Snowflakes fall, bulls behave. Green lights flashing on every trade. Oh yeah. Jingle that cash, let it roll in stacks. 12 games deep, no looking back. The 12 games of Christmas, fade to black. Merry profits, baby. 12 games down, and the year's still bullish.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where today is a beautiful Tuesday, December the 9th, as in the day before, the calm before the storm, because it's all going down tomorrow. Now, obviously, I don't know if the market's going down, but I know all the exciting events, really, of the entire month are really going to be going down tomorrow. I'm talking about that FOMC meeting, when we find out if the Federal Open Market Committee will be cutting rates by 25 bips, which is statistically the likely thing at this moment in time. But what's really going to be interesting is the SEP, the Summary of Economic Projections, where basically all those financial nerds tell us where they think GDP is going, inflation, unemployment, all that good jazz. And then a little bit after that, the chairman of the Fed, Mr. Jerome Powell himself, will be giving a press conference where this time around things might be getting a little bit spicy. There's going to probably be a lot of bit of drama, because I guarantee all the reporters are going to be saying, hey, what do you think about the next Fed chair? What do you think? What in the world is going on with the next guy, Mr. Kevin Hassett, who right now has about just below an 80% chance of being the next Fed chair? So we're going to be chit-chatting about all of that. Obviously, it is tomorrow. And yes, we will have the normal stream in the morning, 9 to 11. And then we're going to be doing the specialty FOMC stream tomorrow, because it's going to be a big deal. But before we get there, we have to get through today as a trading day. And of course, we have some things to chit-chat about. I want to talk about what's going on in Ukraine and Russia, the most recent updates. Not that exciting, but I believe it's important to get into. I want to talk a little bit about what's going on with Trump and his renewed fight with Mexico, potential increase of 5% tariffs because of a water dispute, and then also, most importantly, and maybe you just missed it, but we have some updates related to can Nvidia sell chips to China? And then apparently Trump says yeah. And then right after that, China says kick rocks. We don't want Nvidia's chips anyway. So I want to get into all of that. Of course, we still have some earnings. You might care about Oracle. You might care about Adobe. On Thursday, we actually end up having Avago, which is going to be pretty important. So there's some sizable moves anticipated for both Oracle and Avago. So I want to be paying attention to those just a little bit. And then, of course, from there, we're going to be looking at all the intraday stuff as in the key levels. And today we're noticing a little bit, and I put this in the Goonie Trading Discord this morning, a little bit more of an anticipation for frothiness, if you will, as in the market is kind of gearing up for, they know that this calm period that we've had over about the past week and a half is going to be coming to an end. We're already seeing a shift in the implied vol. We're seeing a shift in positioning. And I'll even show you in terms of the gamma map of all of a sudden, people are starting to think that we might have some like legitimate moves. So I want to kind of get into that because today, like I said, it's the day before. I am anticipating some positioning. Of course, we're going to go over the other events. We have JOLTS today. We have PPI later this week, but it's all really centering around what's going on with monetary policy, the positioning for it. And then, of course, we're going to see how that plays out throughout the day. So I'll give you the key levels. We'll watch the options flow. We'll do all that good stuff. So, thank you for joining me at the crack of dawn. It's 9:06 in the morning. I know we're up before the farmers. We're the first people up in the world actually putting in some work here. So I appreciate you joining me. Whether you're bringing your kids to school, whether you're at work or you're already at your own trading rig ready to rip it for the day, it does mean a lot to me and the entire, I guess, Goonie team here that you guys are showing up day in and day out. So let's see if we can make some good trading decisions today. Let's see maybe if Lady Luck is on our side, if variance is on our side, if we can make a couple shekels here or there. And speaking of shekels, I do want to show you something. Well, first, stock futures are a little changed as Trump approves Nvidia chip sales to China. So we're going to be getting into that. But late last night, when I was really just thinking about my life, thinking about what in the world is going on, what am I doing, where did I make those wrong decisions, I got an email. Your boy, as you can see right here, approved, and there's 15 of those approvals, $2,000 each. I officially did get another $30,000 from Apex. So very stoked about that. I'm going to be giving some explanations and a breakdown and something that I think really could help you guys. But right here, I don't know, it was around late last night. Like I said, I was honestly watching Die Hard. I was watching one of my favorite Christmas movies. I was getting into the Christmas season, and I did get approved right here late last night around 6 p.m. Just started Die Hard, and right here, 2K. I had 15 of them, so another $30,000 locked in. Like I said, I'm going to give you guys, I have some cool things that if you happen to be on Apex or any SIM-funded firm, as you guys know, we're trading it a lot in here, but I have some thoughts that I want to share with you that I think is going to resonate at least with a couple of the traders in here. So pretty stoked about that. But before we give you that breakdown, let me get you ready for the market today. So as you know, stock futures right now, pre-market trading, we're a little bit red. We were in post-market from the Nvidia deal looking pretty decent. Nvidia giving a little bit back now because of the commentary from China. Market did pop. We're giving a little bit back. Technically, we are below the closing value. So if we were to open right now, we would be in the red. And obviously, I'm already watching the key levels of yesterday's high and yesterday's low on both the SPY and the Qs. With that being said, Bitcoin's actually holding pretty nicely. Granted, it's not a huge pop up, but it's at least holding when I see other things drifting down. So that's the screenshot as of now. But I do want to remind you, recently, over the past month to 2 months, we've seen a lot of positions instead of being created after the market closes or before the market opens for regular trading hours, where we're seeing some giant condors and that type of stuff. Now it seems to have shifted a little bit. We're seeing big positions being created between 9:30 and 10 a.m., at least with respect to 0 DTE options trading. So I do really like to check it at 9:50, 10, and 10:10 because generally we're seeing a lot of money hit the table right at market open. So even though this is the screenshot of what we see right now, a big support at 6845, which we just went below, and that is an important hedge fall. I think it's important for us to return back to that. So obviously, we have a little bit of time to burn and important things to go over. Ukraine at a quote-unquote critical moment in war as European allies ramp up pressure on Russia. Ukrainian President Zelensky met with the UK Prime Minister and the German Chancellor and the French President yesterday in London. The war is at a crucial moment, according according to allies, while committing to ramp up pressure on Russia. However, Zelensky noted that Ukraine remains reliant on the U.S. for some things. Well, they rely on us for a lot of things. So if you look at the event-based markets, I'm talking about Polymarket and Kalshi, the chance of this ending before the end of the year, I believe, is now sub 5%. If not, it's right around 5%. So probably not going to happen. But I know I'm bringing this up, and even though we're not seeing the biggest movement with it, it might end up becoming an important narrative, obviously globally, for global politics, and then impacting the global economy and thus our stock market. So might be a bit more important as we get into the new year. So just want to lightly remind you of that. More immediately impacting us, Trump threatens Mexico with a 5% tariff increase over a water dispute. So a little bit of just reminding you guys, we're still technically in this trade war, even though it's been silent and we're kind of seemingly near the end of it. Every once in a while, we see something pop up here. So probably, as this has been going in the past, when Trump wants something, especially as it relates to trade, he ends up getting it. So I'd assume this water dispute is going to go in the favor of Trump. Obviously, I'm not clairvoyant. I can't tell you that definitively, but just looking at just the room here and how things have been going over the past year, I assume it's going to go that way. Trump announces a $12 billion aid package for farmers caught up in the trade war. President Donald Trump announced a $12 billion aid package for U.S. farmers, described as bridge payments to smooth the transitions away from the Biden-era economic policies. Some in America's agriculture industry say they are suffering as a result of Trump's wide-ranging trade war, especially due to conflicts with China, a major U.S. customer. Treasury Secretary Bessent and the Ag Secretary joined Trump for the announcement, basically saying, hey, we know some of the decisions in the short term are very, very disruptive. So we're going to try to help you out in the meantime. So something to pay attention to. Obviously, my heart going out to U.S. farmers. So that's some of the larger stuff on the day. Drilling down to this week and maybe today specifically, we are expected to get the JOLTS job openings at 10 a.m., but I do want to remind you, it's for October. So this is delayed data. Last week, we were supposed to get it as well, and then they just said no. And then this week, I'm already reading that the PPI report, the producer price index that we were supposed to get later on this week, apparently they're already thinking about saying, nah, we're not getting that one for the month of October. So we're still in this weird phase of we have all this data that we kind of want, but it's delayed data. So how much does it impact us now? Some of it they're giving to us. And when I say they, I mean the Bureau of Labor Statistics. And then other data, they're just delaying it even more. And then other ones, they're just straight up saying, hey, we're not getting it. So I just want to let you know, maybe JOLTS jobs data today, but it's not the recent data. It is the October data, 10 a.m. At 1 p.m., we are getting the 10-year note auction. So just maybe pay attention in the afternoon. Obviously, tomorrow is the main day of the trading week. 2 p.m., we're going to be getting the Fed interest rate decision, where as of now, you know that we're getting a 25 bips rate cut. We also are getting the SEP, the Summary of Economic Projections. And then at 2:30, Jerome Powell will be talking. And then later this week, I'm already hearing murmurs of the PPI getting just canceled, but at least we're still going to get initial jobless claims and the 30-year bond auction once again to wrap up this week. A couple other things that should be on your radar. After the FOMC meeting, Oracle is reporting the anticipated move right now is huge. I don't know if you guys checked into this. It is 9.5%. That is going to be a big, big swing for Oracle. So you might want to be paying attention to that. And then Broadcom, which is the second biggest player in the semiconductor sphere, Broadcom, ticker symbol AVGO, reporting after the market closes on Thursday. They're expecting a 6.5% move. So both of these high-flying tech stocks definitely could have an influence. So you might want to be checking those out. Oracle, Broadcom. I currently have a position on Broadcom, AVGO. I have some put credit spreads, a neutral to bullish bet. Oracle, I currently have no live position, but this thing can move. So if you happen to be playing it, maybe you forgot about earnings, maybe you didn't, and you're just being nervous for it, just want to let you know, after the market closes tomorrow, that's when you could really anticipate some large moves. Trump's Nvidia shift hands Xi an opening on security curb. So this is getting interesting. Last night, maybe you saw what happened with Nvidia. Let me just dive into this one because we do have a kind of an interesting story here. Nvidia, let me move this over because I want to see if it breaks out of yesterday's high. You can see yesterday, we ended up closing at 185 and some change. We spiked all the way up to 191. Percentage-wise, when you have a company quickly add basically 3%, but you're already a $4+ trillion company, that's billions and billions and billions of dollars in market cap. And obviously that was on this news right here. Trump greenlights Nvidia H200 AI chip sales to China. If U.S. gets 25% cut, says Xi responded positively. President Donald Trump said the U.S. will allow tech giant Nvidia to ship its H200 artificial intelligence chips to approved customers in China and elsewhere. President of China, President Xi Jinping, responded positively, quote unquote, to the proposal. Trump wrote on Truth Social. Trump post says that 25% of the chip sales will be paid to the U.S. government as part of the deal. So that was the first pop right here. That was basically aligned with this huge pop. And then not too long after that, U.S. uncovers scheme to reroute Nvidia GPUs worth $160 million to China despite export bans. All right, maybe not the best thing you want to hear. But then what was even more wild after this, China said, we don't know if we're going to be taking them. So all of a sudden, that's the news that if you're in Nvidia, you're probably like, wait, it was so good when I was going to bed. And now when I'm waking up, why are we giving some back? There's murmurs on the street, or not murmurs, like legit commentary from China saying, yeah, we actually don't know if we're going to buy them. So the whole situation is getting a little bit, I don't know, confusing and convoluted. So it'll be interesting to see which way this actually breaks. Let me get rid of this, and right here, let's see what they have to say.
John, that's right. We've got a new social media post from the president on Nvidia. The president saying on social media just moments ago, I have informed President Xi of China that the United States will allow Nvidia to ship its H200 products to approved customers in China and other countries under conditions that allow for continued strong national security. President Xi responded positively. 25% will be paid to the United States of America, the president says. He goes on to say in a very lengthy post that this approach will also apply to AMD, Intel, and other American companies. So the president's suggesting here that the U.S. government is going to take 25% tax effectively on chip sales to China.
What kind of sales?
Nvidia in this category. And then also he says he's going to apply that approach to other American companies. So maybe a cost of doing business here for Nvidia. There's a lot of questions around this, John, of whether China needs this category of chip. The president says this deal will not apply to the Blackwell and Rubin categories, but it will apply
more
to the
advanced
H200s, John.
All right, so that was the initial thing, obviously on the surface level sounding pretty good. And then a little bit fast forward to this morning, China to limit access to Nvidia's H200 chips despite Trump export approval, according to the Financial Times. So that is really, in a nutshell, why we went up so much and then gave it back. Obviously, when I say giving it back, it's just pretty much giving it back to where we closed. I'm not saying like all of a sudden it went red, but at first it's just you had everyone reacting in the headlines, oh, cool, China can buy these chips. And then people are rightfully in chat even pointing out, okay, it's not our best chips. And then China seemingly doesn't care anyway. So there is a little bit of, I guess, pre-market movement in action in the world of semiconductors. You could see Nvidia on the screen right there. You could see Avago right there. You could see AMD right there. Everything kind of getting a lift and then giving it back pretty quickly on the newest update from China. But I would anticipate some decent moves today. Now, do I know which direction it's going to move? No, but I think it's going to be fun to watch. All right. The important thing is really going down tomorrow. And I know I've been stressing this pretty much all week. I even started talking about it last week. An unusually divided Fed is expected to deliver a rate cut. So right now, we have three things that we can really anticipate. Number one, we're going to get a rate cut. As of this moment, the market is 94% confident that we are getting a 25 bips rate cut. All right, awesome. The other thing we can anticipate is they're probably not going to do it in a unanimous vote. Across the board, the voting FOMC members, this is probably going to be the third FOMC meeting in a row where we have some dissenting votes. It's not going to be unanimous. Despite unease among voters, Chair Jerome Powell appears set to lower interest rates again and signal a higher bar for further easing. So it's that final part that the market's going to be really interested in, and this is probably going to come from the commentary at 2:30 tomorrow of, all right, what is this bar? Is it dovish? Is it hawkish? What does it look like going forward in 2026 for another 25 bips rate cut? And then this time around, we kind of get the special thing that you don't get that often of, is there going to be questions or updates or commentary either from Jerome Powell, from the reporters, or from Trump himself on who the next Fed chair is going to be? As you can see, Kevin Hassett, who is currently the director of the NEC, the National Economic Council, has a 77% chance on this announcement. I would expect that the market would react well because he's viewed to be a dovish player. So if the next Fed chair is like openly dovish, I would assume that equities and crypto are going to respond in kind. So just wanted to put that out there. But looking at the setup now, option traders bracing for wild stock trading off Fed decision. The Federal Reserve is expected to deliver a quarter-point cut to its benchmark interest rate with implied odds of 97%. So depending on where you're looking, it's all very high. Yes, we're getting a 25 bips rate cut. The implied move in the U.S. stock market after the central bank's decision is just shy of 1% in either direction. You can check this stuff out. I love looking at this of where the vol is at, and you can see we're actually anticipating vol remaining pretty high really up until the start of next week. Vol is not calming down until Monday of next week, because really what you have is today we're getting ready with the JOLTS jobs, then we have the FOMC decision, then we have some earnings, then we have initial jobless claims, we also have the producer price index, which once again that's questionable, and then we just have the weekly OPEX. So vol is remaining kind of up here. Now, it's not the most insane implied vol we've ever seen, but we're not really seeing things calm down until next week. And then from there, who knows how the market reacts to the FOMC meeting? We could see this entire thing change and all of a sudden bets go haywire. So with it, we're definitely not seeing the most frothiness that we've ever seen, but we're definitely seeing some traders are gearing up for some fun. And just to put a few sprinkles on this chaotic, dramatic Sunday, Supreme Court appears ready to give president more power to fire government officials. Key Justice, however, expresses concern about the Federal Reserve. Basically, Kavanaugh says, hey, I see what's going on in terms of the power of the president, but is this necessarily the best thing for the Federal Reserve, which should be an independent body? And all of a sudden, similar to the way a president could theoretically stack the Supreme Court in terms of just adding more and more justices, in a similar mathematical way, all of a sudden, is this giving the president the power to stack the Federal Reserve however he or she wants it? So it is giving President Trump a bit more power, but remember, this is giving every president from here on out more power as it relates to allegedly the independent Federal Reserve. So we're going to see how this one plays, but this particular one, lots of drama. And that's exactly why in the update video, it was basically drama, because seemingly everywhere you look today, it is nothing but drama. One place where you don't have to deal with drama is the newsletter, mattkohrs.locals.com. It's in the description of the video. My mod will drop it in chat. You can get this for 100% free. You never had to pay for it. You never will have to pay for it. Comes to your email inbox every single Sunday. And I basically just give you a breakdown of what's going on. I explain what's going on in the market, a breakdown of the major earnings, and I kind of highlight the ones that I think you're going to care about most, all the major macroeconomic events. And then for my day traders, scalp traders, probably find a little bit of usefulness in the individual trading day seasonality, which brings us to today. Historically, the bulls have won this day 57% of the time. So percentage-wise, the bulls have a 7% edge. However, when the bears win, they win more handedly, as in it's a bigger sell-off. So right here, you could argue is bullish and then bearish and then bullish and then more bearish. So it's neutral leaning bearish, which is exactly why I put that bias for the day. So is it the most overwhelming seasonality we've ever seen? No, it's not even close. But I would say from just a seasonality standpoint that the bears do have a slight seasonal advantage today. Tomorrow is the exact opposite, a little bit more bullish. Thursday is bearish, and then Friday is bearish. Even though we're in that Santa Claus rally time of the year, this is one of those standout weeks that it actually does have a clear bearish skew. Now, I'm not saying it's like the most immense bearish skew we've ever seen, but just from a pure nerdy ass like number standpoint, over the past 20 to 30 years worth of information. Actually, even over the past 3 and 5, we've seen it as well. So looking at the past 3 years, 5 years, 20 and 27 years, the Bears have won this week in aggregate. Now, I'm not by any means saying every single time they've won it, but if you just look at the numbers and what it averages out to, this day has paid, or this weekend, most of these days have paid more to be a Bear than to be a Bull, but it's not some like extreme amount. So this is the type of information you could get for free. Sign up for the newsletter, mattkohrs.locals.com, and it's in the description of the video. All right, bringing us to the market for today. All right, there's our daily chart. Overall, you can see that we pumped to an all-time high in late October. We gave some back in basically 2/3 of the way through November, ended up being a fake out breakdown. And ever since then, we're kind of getting this V-shaped recovery. This might be a double, triple top here. You can see we had a strong recovery and now we're just getting that drift up. This drift was somewhat highly anticipated just because everyone's like awkwardly straddling for position as we're going into tomorrow's FOMC decision. So as you see this vol crush, you're just seeing this slow but sure grind to the upside. And today's going to be the last day of that. With that in mind, in terms of today or tomorrow when things inevitably get crazy, I do want you guys to be mindful of the S&P 500. The overall new all-time high would be a break of this October, Wednesday the 29th high at 6,920.34. So that is a key level for my swing players. And then also to the downside, and to the south bearish side, we do have a downside gap fill at 6776.40. So once again, for my swing players, and I guess maybe if we get there on an intraday, these might become pretty important, but those are like giant pivot levels I will be paying attention to. Also on NDX, same thing. We popped up, we hit an all-time high, V-shaped recovery. There's an upside gap fill at 25,887, and then there's a downside gap fill at 69. So for those of you playing QQQ, or NQ or directly NDX, you might want to kind of map over those equivalent levels. Bitcoin is unfortunately, it's not selling off anymore, but it's unfortunately not recovering either. So we saw this huge pop making an all-time high at the start of October, basically a month before the equities market. And then ever since then, lower highs, lower lows. The price is below all these major EMAs. Recently, we do have this higher low that maybe you want to be paying attention to. As long as that structure holds, maybe we're getting a bit of recovery, but personally I don't think I'd be tracing that in the short term until we break above this 50 EMA. But overall, it's just crypto's a bit on a relative basis, it is weaker than what we've been seeing in the equities market. And if anything, we're seeing commodities such as gold and silver just absolutely rip. I mean, we're seeing what's for many, many years thought to be a boring thing, rip to kingdom come. So hopefully you're making some money on one side or the other. Now, with respect to today specifically, these are the key levels I'll be paying attention to. If the market were to open right now, we would be opening at 6840. 6840, pretty much this major gamma level. It is a huge gamma level, definitely worthwhile to map out, definitely worthwhile to pay attention to. And it happens to be smack dab in the middle of today's transition zone, which the top side is 6860, the bottom side is 6820, and we're right at the middle, slightly below our closing value from yesterday, which was 6846. So that's our overall just transitional period. We're going to be in it. So out of the gate, I'm not going to be doing anything. I'm just going to be waiting to see how it goes. Obviously, I marked out yesterday's high, low, and close. And then from there, we just have these major gamma levels. So if we break above 60, I'm watching 80, 90, 6,900. If we break below 27 or 820, I'll be looking at 6,800. And then from there, we have the downside gap fill at 6,776. Remember, personally, I'm never going to be married to the bull case or bear case, especially if I'm trading well. Maybe if I'm tilted, I might be a little bit biased or maybe a little bit too biased. Other than that, on an intraday basis, I just let the market and the trend tell me exactly what I should be doing. Obviously, I'm watching these key levels. When the market really gets rocking today, I should actually open this up. We're going to be paying attention to the options flow, which I believe is absurdly helpful. Let me actually get that ready for us. Here's a look at the S&P 500 yesterday. It pretty much sold off, a little bit of recovery, then a hard sell-off after that. Looking at the Mag 7, the combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, same thing, sold off, a little bit of a recovery around 1 p.m. and then sold off for the remainder of the day. So we're going to be watching not only the price movement with respect to momentum right now, the 5-minute, 10-minute, and 30-minute are all bearish, and even the 4-hour is potentially testing here. So that might be something for us to all watch. Same thing on the NASDAQ, 5-minute, 10-minute, 30-minute are all bearish, and the 4-hour is holding a little bit better bullish. But with this in mind, remember, I get that right now we're seeing this drift to the downside. First of all, I'm seeing way too many people freak out of why are we going down? I think a better question is why did we seemingly bounce almost 5% without even really looking back? I got so many questions about it yesterday of like, why are we selling off? What's going on? And it's this natural bias in the market that people think all green days are expected and should happen. And then the second we have a red day, everyone's freaking out saying, what? Why? Why is this happening? When in reality, it's a slight pullback. I mean, we ended up popping 5.7%, and then we had a how much of a pullback? A 0.4% pullback, and everyone's like, why would that happen? So I think when in doubt, zoom out. Sometimes it is helpful to take into account the larger picture. So when I'm showing you all this momentum, yes, the 5-minute is bearish. So is the 10, so is the 30. That's all true. Same thing on the NQ. But remember, all this stuff can change so rapidly. We're getting announcements about Nvidia. We have macroeconomic data. We have a Fed decision tomorrow. We have earnings after that. There is a lot to consider. So my point is, don't get married to a bias. Play the overall price trend, the price structure, price momentum, and options flow, and respect your risk and control your sizing. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. We are off to the races. The SPY already popping to its closing value from yesterday. So right out of the gate, giving us a classic red to green test. As I've already kind of alluded to, I will personally... Let me zoom in on this. I want to see more of what's happening here. As I've kind of already alluded to, I don't really plan on trading much right out of the gate. I kind of want to be a little bit more patient and see what overall structure and what overall flow we're going to be getting on the day. If you happen to have a trading strategy that tells you to trade out of the gate, great. Stick to your plan. I wish you the best of luck and just control your sizing and respect your potential downside. But I'm looking at this right now, and I see that we're opening up right in the middle of the transition zone. And not only that, we're in between two key levels, a mega gamma level right here at 40. Like, it's huge, absolutely monstrous right there, 45. And then you could see, where does that align? Pretty much the closing value that we had yesterday. So I'm watching this zone. Of course, if the bulls catch their footing, I'm looking for the breakout and hold to 60. And if the bears end up catching their footing, I'm looking for failure at this level and quickly a drop to this 7-point region between 27 and 20. So pretty much like that out of the gate. But overall, I see choppiness in this area. Remember, you don't need to be trading right out of the gate. Once again, if your system tells you to be trading right out of the gate, I would be a fan of you sticking to the math of your system. But is that your system, or is it you just, I guess, trading with your gut? I'm getting alerts on Meta. Potential rejection here at the 50 EMA. There is a downside gap fill at 648.85. So if you're playing this double top rejection at Meta, obviously your risk would probably be in the realm of 676, at least the way I look at the market. And your first target would be 648, and you have potentially a failure below there. But it ripped all the way back up to its 50-day exponential moving average, danced around, showing a little bit of weakness this morning. You have a natural downside gap fill at 648.85. I'm getting an alert on NQ. I don't know why. Oh, it's this 4-hour alert. We're breaking that low already from yesterday. So we are going down apparently. So NQ taking out a low. The Qs are hot in pursuit. Nvidia is taking a little bit of a smack this morning, while Apple is actually showing a little bit of strength. It's one of the few green things on my watch list. That and the small cap sector. The reason I'm looking at Apple is relative to what I see going on in the market, I see some strength here. I mean, I kind of see a beautiful just higher highs, higher lows, a little bit of a pullback right here, a potential another higher low that if it starts to pick up, I might just be able to risk this recent low and play Apple to the next leg higher. I haven't really been playing Apple much. I just haven't really been paying attention to it, haven't really seen the setups that I like. But right now, it's definitely on my watch list as a contender. Apple is. Nvidia is as well, if he can get above and hold above, but it looks like it might be getting smacked. Palantir, I'm already in a play. And Avago, I'm already in a play. There are two downside gap fills on Avago, 393.53 and 383.89. Bitcoin's there, kind of going flat. The Russell almost at a new all-time high. Did it technically make one? No, it tied it. So yesterday, the small cap sector tied the all-time high, and it's on knocking on the door of a... Well, look at this recovery. Holy cow, why did none of you guys tell me small caps were ripping? In the past week and a half, the small cap sector has ripped 10%, and none of you guys thought to bring that to my attention. You guys thought, ha, 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 we're going to keep that a secret from Matt, that the Russell 2000 is ripping like no other. I've been working day in and day out to get a couple shekels, and this thing's been ripping to kingdom come. All right, thanks, guys. I guess I realize whose team we're all on today. You're all keeping the secrets from Matt, even all the work that I do here. That's crazy. You guys are nuts. You guys are straight up nuts. But honestly, to explain why the Russell's looking so good, most likely going to be really related to the anticipation of with rate cuts. Remember, when the Fed lowers rates, money itself becomes cheaper because you can loan it at a lower rate. And who's that going to directly impact? Smaller businesses, because they're going to be able to get capital for cheaper so they can expand their business efforts. So whenever there's murmurs of rate cuts and continued rate cuts, yes, the overall market does well, but small cap just statistically seems to outperform. Okay, who told you, Matt? No one told me. I just figured it out right now. I saw it from my own eyes that you guys were keeping the secret from me. So assuming I want to play Piper but can't do spreads on public yet, would opening in both legs individually do the same? I assume it would, but just be a little clunky. What do you mean you can't do spreads on public yet? If you can't do spreads on public, you wouldn't be able to do it in general, because what the rule would be is that you can't be selling the one side of the premium. So like, I mean, all the spread is you're just putting in the orders at the same time. There's like functionally it's easier to do it together as a spread, but functionally it's two independent legs and they just happen to be bouncing off of each other for like a risk management from the broker side. But if you can do the two legs individually, especially the side that you're selling to open, the STO, you can then do a spread. It says I need level 3. I'm only on level 2. Okay, go get level 3. You're not going to be able to do, if you can create the two legs independently, you'll then be able to also simultaneously do spreads. Like spreads themselves aren't any different. It just is an easier thing to execute. But all a spread is just those two legs. Like, how wide are your credit spreads that you are talking about? It depends on what the underlying is. I mean, on SPX, the minimum you could do is 5. On a lot of equities, it auto sets to 2.5. Things like SPY and Qs, it's just $1. Like it depends on the underlying. On NDX, I think it's like the common is 10. But anyway, just so you guys know, the SPY out of the gate popped, dropped, and now we are battling back at this red to green move. Once again, this is the closing value. The Nasdaq is showing a little bit of weakness. Nvidia is getting hit, but Apple's actually having a pretty decent day. Tesla's already bouncing back green. Tesla's also on my watch list. Why did I put it on my watch list today? Oh, another potential cloud bounce. So I'm definitely watching what's going on with old Tesla here. Watching Tesla, watching Apple, watching Nvidia, watching Palantir, Avago. Where is Apple? Apple. The apple of my eye. I kind of like what I see going on in Apple. Oh, do I want to play? I haven't played Apple in a while. I almost feel maybe I should. Just something solid to wrap up the year. Oh, Apple, oh, Apple, oh, Apple, oh, Apple. 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 Do I actually want to do this? Is it worth it today? Fuck it. When in Rome. Am I doing it right? Yes. All right. I'm just throwing out an order. I'm reaching a little bit to see if I can actually get a fill. Who knows if I will or I won't, but why not? Oh, actually just got a fill. Okay, if you're in the Discord, I did put on a new Apple Play here. I'm taking a quick screenshot and I'll throw it in ASAP. I just like what I see on the daily chart. I'm not doing anything too crazy, too creative or anything like that. Where do we have? New. All right, just got another. Oh, got the alert on Apple. Okay, cool. We did that. What do we have here? What is this? My producer sent this in. What do we have?
is behaving more like a risk-on asset.
ARK Invest, Kathy Wood says Bitcoin 4-year cycle is going to be disrupted and we may have seen the lows already.
It has played the risk-off role at different times during the European sovereign debt crisis, during our regional bank crisis. But right now, it's risk-on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent. And I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago. Bitcoin is...
I don't always agree with Kathy, but I do, on this particular subject, agree that the 4-year cycle is kind of donezo. There's just... obviously, the technology of Bitcoin is the same as it always has been, but what's different truly is I guess for lack of a better word, the adoption levels and the institutional players involved and just how widespread Bitcoin is and how rapidly it's growing. Whoa, what just happened there? What the fuck? Is that a misprint? That has to be a misprint. There's no way the Qs actually went that low, right? Yeah, that's a misprint. Yeah, right here, if you're seeing this wick on QQQ, it didn't actually trade down to 621 at 940 this morning, and you could fact check that here by looking at NQ. You would see a similar thing, but we don't. So a little bit of a data misprint there on Q. So if you're seeing this wick and freaking out of what happened, at this time at 940 in the morning, we did not wick down to 621. No trades actually got entered there. It's just a misprint, and that happens. It's not some giant mysterious BS thing. It's a misprint of data, and you could always fact check it by looking at NDX right here. We're not seeing it on NDX, and you could also look at NQ. These things are all tracking the NASDAQ 100, and the fact that we're not seeing a similar movement on NQ or NDX tells you that it is in fact a misprint, and we didn't trade down at those levels. It is a misprint. It is 100% a misprint. I don't know why people try to argue on these things. Like ETH bullish. Nope, just made it. It's not a misprint. It is a misprint. It is 100% a misprint. I just literally proved it to you by showing you NDX and NQ, and we did not go down and take out the 933 low. Did it go down? Yeah, obviously I'm showing you that right here. I mean, I'll bring it up. I'm showing you that we did take a hit, but did it take out the 933 low? No, it took this hit. It didn't. Like, you'd almost have to double that drop for it to take out. It's not. I don't know why people try to do this. Like, you're just wrong. Like, there's certain things in this world that are opinions, and then there's certain things that you have data for, you have empirical evidence of. You can look at the time and sales. You can look at the SIP, you can track it, and you can look at all the trades at 939, 940, and 941, and nothing on the Qs traded down at 621. It's a misprint. It's just, I just traded it. No, you didn't. You did not trade at 621. You did not. No one in this world. It probably traded down to not even below 622. Like this is, oh man, I don't understand how there's people who are betting their hard-earned money who are just holding these invalid views. And it's like so easy to show that they're invalid, and yet you hold them so deeply. You're like, no, I'm right. I'm right. No, you're not right. No one in this world, in this bar right here, traded anything below 622. You probably didn't even get it below 622.50. And it's so easy to prove. Look at NQ. Did it dip all the way down? No. NDX. Did it dip all the way down? No. Everything dipped to roughly half the range. Like, just eyeball it. It's pretty easy to see. It dipped to half the range. And then yet, all of a sudden, you think the Qs had this overextension? No. It literally didn't even go below 622. Not even, no less 621. It didn't even go below 622.50 in that moment. And yet then they're like, I think it did. What the fuck do you mean you think it did? We can just look at the time and sales. You can literally see all the trades in this bar, and none of them are going to be in this price range. You're just assuming it is because you saw a candle on a chart, and you're like, nah, that's the candle. And because I saw a candle, it has to be right. Like, come on. Fuck, man. Folks, when it comes to the market, understand that there are people working very, very, very hard to take your money, working extremely hard to take your money. And when you start doing dumb shit like that, that just means they're so easily going to be able to take your money and just drag you over the coals. Like, come on. Like, it's just, I find it so concerning when I see a group of retail traders that just like hold, like, you don't even, I suppose it's just so easy. This isn't even a debated thing. I understand if it's your first time trading, you're like, oh, that's a little weird. Like, what's the deal? And then you get informed, and then you move on with your life, and you realize that, yeah, sometimes there's just misprints in data. Like, it happens. It's annoying, and you would wish that maybe these data providers could more rapidly clean it up. Maybe, like, you would think that, okay, if we all identify it as a misprint, why doesn't TradingView, whoever they're getting their data from, just quickly clean it up so we don't have to see this on our charts? And like, for newer people, get a bit confused. And yeah, it does mess things up, especially if you're on a bad data provider. This actually could skew things such as your simple moving average or exponential moving average. It can mess up your RSI, it can mess up your MACD. It does have the capability of impacting, because remember, these computations of your indicators are literally just using your chart data. They're not going and like double checking your chart data against like actual, I guess, the time and sales. So if you're exclusively going off of charts and the indicators based on the chart data, it can mess it up. It definitely can. So there are farther reaching implications that you kind of have to consider, which why, like, I think one of the safe things to do is right away go and check like highly correlated assets like QQQ to NDX to NQ. My pronouns are misprint. I like that one. That's a funny one. It's like watching paint dry. Well, I think we're getting some movement. We're potentially getting a little bit of a breakout. Here, let me reload this. We're missing out on the flow today. S&P 500, this is what that drop was. Someone bought puts and sold calls. So we've removed positive delta and added negative delta, and now we're already fighting back. And then looking at the Mag 7. Same thing. We were climbing. Someone just executed a large trade right before 941, and it just smashed the delta. It just smashed the delta. So Nvidia got clocked for the first 3 minutes. It's trying to recover. Tesla is slowly but surely climbing up. Apple is also climbing up. Just got hit a little bit. Tesla's looking decent. Microsoft's trying to rebound. Meta is not looking good. Nvidia just took a hit. Palantir is looking good. Avago is trying to fight back. So a lot of things opening with a bit of weakness, and Meta is the only one that's jumping out to me as still showing weakness. Microsoft attempting to recover, Tesla recovering, Apple green, Nvidia try to recover, actually also now getting hit. Palantir definitely recovering, Broadcom recovering. So in terms of the major ones jumping out to me that have an impact on the S&P 500 and the NASDAQ, how about Google? Google's looking a little bit of weak. Rumba's holding 7. Meta's down, and Nvidia's turning. So Meta's currently the weakest on an intraday basis, and Nvidia is not far behind. But then the rest of them are actually looking pretty decent. All right, I'm watching this downsloping trend line on the Qs. The SPY is just chilling. SPY's just chilling right above the red to green move. Remember yesterday on SPX, we closed out at 6,846.5. We opened up with a little bit of weakness, quickly got that upside gap fill, and now we're just kind of range bound, not really going anywhere. That wick down that we saw on SPX, the actual wick, like the true price prints, came right down to that test of green to red. So in red to green to red, test. Maybe we're picking up. If you're trying to play this, there might be a reasonable play, the breakout of 52 up to 60, risking 46. That's not the craziest play we've ever seen. Definitely not the craziest play we've ever seen. Wait, hang on. I probably messed up my screen. Let me get up the right chart. I'm not 100% loving the setup that I'm seeing. I'm kind of watching this run-of-the-mill bull flag, I suppose. Oh, right up to VWAP. That's not the worst play. Kind of the opposite of what we saw yesterday. Something like that. But we are seeing a little bit of, like I said, frothiness, if you will, in the options market. Not loving it. Just, if the risk was a bit closer, maybe I would take it. But the risk at this case is 96. It's not the worst thing. It's 14, 13. I guess you have seen me take trades with that type of risk before. It's just the EMAs aren't really trendy right now. We are below VWAP. VWAP's all the way up at 43. That's a nice target. This breakout high is 53. The SPY's starting to go. The Mag 7 just took another hit, but price held on pretty decently, I must say. The SPY is attempting to recover here.
Order submitted.
Wow.
Order submitted.
That was like some slippage getting into this play. 95 is my risk. 25. What is this? This is 10. What is this? This is 03. What is this breakout? This breakout is 34. This first breakout is 34. The next breakout right above VWAP is about 54. So 34 and 54 I kind of care about. All right, we'll see how this one goes. What time is it? 9:51. Little bit of a risk of that delayed JOLTS, but like I said, it's delayed October data. Really what my plan is to, like, I guess, give you guys a breakdown real time is on this push from 34 to 43, somewhere in this 10-point region. I do want to move my risk up to this 950 low because then I only have 15 points of risk. And that's something that, like, is completely acceptable. Honestly, this risk is fine. I sized it to one contract, so I'm fine with this. I figure it's a worthwhile shot on the retest of VWAP. I've done some statistical analysis of retest, and it is a popular play. So with respect to odds, I'm on the right side of the play, but that there's no odds that are guaranteed. I'm kind of watching this VWAP up here at 43, and then we also have the point of control at 20. So I'm basically just hoping that this region can hold. And if I'm wrong, I'm wrong, and my risk will get hit, and then I'll move on with my life. But I'm kind of watching this wick high at 34. I'm watching this wick high at 54. I'm hoping that we can hold right here, this EMA line, kind of just range bound. Obviously, we push up into it, pull back. I'm hoping that the trend continues. But even if you're right, wrong, 50-50, it just comes down to your risk management. So we're going to see how it goes, but I like it. I don't think this is necessarily like an A+ setup. I'm seeing the recovery in the S&P 500. The Mag 7, oddly enough, the fact that it's holding price, even though it got hit, I'm actually taking that as a good sign because price is holding even though they're dumping the delta on it. So, all right, I'm seeing over here, 5-minute recovered, 10-minute recovered, 30-minute is testing. This is the one thing that's really freaking me out. 5-minute is green, 10-minute did not go, 30-minute did not go. So it's like I said, this is not my best A+ setup trade, but hey, if the market is just distributed 50-50 on pretty much any time frame, if you can control your risk, that's the name of the game. The name of the game. And like I said, I'm looking for the S&P 500 drifting up. Really, my play on NQ, I did it via the NASDAQ, but it was more so of what I was seeing in the S&P 500. We talked about this breakout at 52, risking 46 and pushing to 60. And by the time it gets to 57, 58, you could probably move that stop to break even. But as I'm saying that, we are very rapidly approaching my risk. Actually, it's about to tag me. Yeah, it's about to hit me. Little fail right here. Maybe I get lucky. Here, let me give it to 94. just in case they just want to quickly tag it. Because what was this low? 96. Just in case. Maybe I get lucky with a bounce off the 600. Maybe I get lucky. Key level. We were just seeing that on Bookmap right here. You could see there were sitting buyers at 600. So I'm hoping that this psychological level can hold, and now it's a technical level. I'm almost thinking about moving it up to this low, just because if it cracks this, the odds of it cracking this are very, very high. So maybe I get lucky with this double bottom, but it's not really that lucky. When we saw on Bookmap, I knew I was protected because that whole time we saw these sitting buyers. And then I'm just hoping right here, now we see sitting sellers at the POC, the point of control. So I'm hoping it can take these guys out. So we'll see. We'll see the appetite for the market today. We'll see the appetite. Is that even really saving me much money? That'll save me $100. Save me $100. I'm not loving this succession of lower highs. Lower high, lower high, lower high. I'm really needing this to hold as a higher low, but it doesn't seem like it wants to. Basically, the name of the game is how many buyers are going to try to hold 600. Will these buyers continue to hold right here? Or basically the question is, do these sellers get taken out or do these buyers get taken out? If I might get lucky and we take out these sellers first, great, I'm good. If we take out these buyers first, I'm probably screwed. So I'm seeing some appetite. I'm seeing some appetite to get back up. All right. Well, let's de-risk a little. That, like I said, it's very much just a little. That doesn't help me much, but hey, it's the system. I'm sticking to the system, even if it's a couple points. The name of the game is lessen your risk. In reality, if I had waited, I could have been a bit more patient and entered at 16 instead of 26, saving myself 10 points. In retrospect, obviously, we're all phenomenal, excellent traders in retrospect, but woulda, coulda, shoulda. Woulda, coulda, shoulda. I haven't really been green much on this particular trade, to be completely honest. I kind of like 98 better. All right, 98. There's nothing special about 76, just to clarify. I know you guys, we spent a lot of time talking about the downside risk and how I'm managing that. A lot of the times, this is just automatically set up from like how I enter it with the ATM. There's nothing special about 76 except for the fact that it is 50 points above where I get my fill. That's it. There's no technical level, psychological level. I just set up my ATM right here, my ATM strategy called Runner. It just auto sets it to 50 points and I end up moving it. I just like to get it up on the chart. But most of the time when I'm trading, like probably 70% of the time, the reason I get out is because my trailing stop is hit. Hopefully my trailing stop is hit in the green. But like I said, about 3 out of 4 times when I'm trading, I'm getting out not because of my profit target, but because of the trailing stop that I just, if I'm trading well, I'm just aggressively following. JOLTS in 3 minutes. Well, at this point, hopefully I don't get screwed. Hopefully I don't get screwed, but we'll see. Let's see. SPY is still generically trending to the upside. MAG 7 starting at 954, generically trending to the upside. If we look at this, 5-minute is bullish, 10-minute is bullish, 30-minute is testing. On NQ, 5-minute is flat, no trend, 10-minute is bearish, 30-minute is bearish, 4-hour is bullish. If we look at this, I'm looking for that breakout at 60. NQ is not, I did not draw this properly because we moved too much in pre-market. All right, let me redraw that. Let me redraw that. So this was technically market open. So our dip was to 588. Honestly, I could probably use that as a risk point. I'm right now at 98. I want to see the takeout at 60. That's the 50% retracement through the overnight session right here. 60 is that half point. And if you break and get going, you can really probably watch close to 730, which is where we hit at late last night, around 9 p.m.-ish. 9 p.m.-ish. But that's if this data comes out well. Let me bring that up. Our boy Rick Santilli should be on. They generally bring Rick on this. Judge unseals Maxwell's grand jury materials citing Epstein Files Act. Okay, if you say so. If you say so. All right, so the point of control is still at 20. There are buyers that I'm protected by at 600. I see sellers up here at 51. Once again, this is for NQ. And this data is going to be dropping in about 15 seconds. So I'm clenching up the cheeks and we're letting this one ride. We're clenching up the cheeks. Oh, that was a wick. Which way are we going? Which way are we going? Immediate response to the downside, but not much. It hit all the way down to 605. I was going to move mine to 608. I'm kind of happy I didn't because it quickly bounced right back up. That they're still on break. All right, I'm going to feel a lot better if it takes out 34 because we just double top there. We hit it at 9:47 this morning and we just hit it again now. I would love for it to take out VWAP here, the volume weighted average price. A lot of traders react to it. It's not my favorite level, but because a lot of other traders pay attention to it, I'm forced to pay attention to it. But I'm watching 42 and I'm watching 53.
And David Faber. We are live from Post 9 of the New York Stock Exchange. The Fed meeting getting underway today as Wall Street waits for a rate decision and guidance from a divided Fed. We'll talk to Goldman Sachs
VWAP
credit
smack.
expert Johnny Fine about what he's expecting. Plus, Nvidia back in focus.
Come on,
as
breakthrough.
President Trump says the company can sell some of its AI chips to China, but does China want them? We'll discuss with the top analyst. And the majority of Elon Musk's wealth now comes from SpaceX. We'll talk about why that
Come on, 42.
could be a red flag for Tesla shareholders.
Let's get some breaking economic data in JOLTS with Rick Santelli.
Here's our boy, Rick's in chat.
Hi, indeed, Carl. This is October read for JOLTS, 7,670,000. That's not a bad number. 7,670 actually would be the strongest number going back to May when we were 77.7 million and change. So that's pretty decent. And considering that the expectation was for a number around 7.1 million, so it's definitely better than expected. We're also getting leading economic indicators, which have been leading us in a negativeville lately. This is September read coming in exactly at his matching expectations at down
Look at this guy. What a gentleman.
Last month upgraded from -0.5% to -0.3%. And believe it or not, -0.3% is actually the best number going back to July when it was up 0.1%, because we really have been mostly negative. We've had one non-negative reading all year, and that was the up 0.1%.
Mag 7's picking up.
We also had a
S&P
0
500
reading.
is going
So
flat
this is the
after a nice
7th
pop.
negative reading of
Going again.
2025. Interest rates have been going up, not only here, but around the globe, Japan, UK, Europe, and indeed, we're now hovering at 417. If you recall, yesterday's high yield was
Stop
right
management.
around 419.
Stop is now at break
We're gonna pay
even.
very close attention
I've taken
to that.
all risk
Maybe
off the
biggest
table.
Feature of all today, outside of the fact that interest rates are going up, we do have a 10-year auction at 1 Eastern for $39 billion. But the notion of we have a Fed ease and all interest rates are doing is moving a bit higher, and the curve still snuggling up on 2s, 10s towards 60 basis points. Sarah, back to you.
Yeah, that's not exactly what they'd want to see when they're cutting interest rates. Thank you, Rick. Rick Santelli with a spike up in rates there on the better than expected job openings data. Also got some alt data to share with you on consumer spending. This comes from Consumer Edge, which I always follow because they look at point of sale credit card data from stores.
I would have never gotten my fill because it hit 70. My initial profit target was 71, so I would be really pissed off.
They look at it by income group. And, we've heard a lot about the K-shaped economy from companies and from executives, but here it is in the data that they are seeing in the actual spending. So if you look pre-Thanksgiving, clearly that trend was very much in place where we saw, the dip in spending from the lower income cohort. It's continued throughout this holiday shopping season, where pre-Thanksgiving shopping and also Black Friday to Cyber Monday spending at the lower income has been soft or actually declining. Very different story if you make, for a family household of a more than $100,000. As you can see, strong growth there. And just some interesting tidbits from the data of where the growth is and where the spending is happening. Off-price department stores. TJ Maxx was cited as one. TJX. Discount and dollar stores, all three dollar stores were cited in that data, saw growth. Footwear up 4%.
I'm looking
Active
for
and
VWAP
athleisure
bounce.
was very
If
strong.
it comes
Some of
down
the
too far,
places
obviously
that
I'm going to
weren't
get
seeing
knocked
as much
out.
growth during this holiday spending were the luxury department stores. Think Neiman Marcus, Saks Fifth Avenue, the plus size stores like a Lane Bryant, which might speak to the GLP-1 impact. That's been in long time decline over the last few months.
Getting close.
So the spending is happening in, interestingly, cosmetics, footwear, athleisure. And again, at the high income, it really jibes with what we heard from Walmart's CEO earlier on Squawk Box today, Doug McMillan joining, and he re-emphasized what they said on earnings, which is people with higher income levels are shopping with us more often and have been for a while, but there's pressure for those at the lower income levels. That's the story of the consumer right now.
It's been the ongoing story for a long time, hasn't it, Sarah? I mean, nothing's really changed.
It appears
All
to
right,
be
I'm using that low as my risk. So no matter what, I'm making money. It's just a question of how much money.
All the stops for spending.
This is getting a little boring. We like our boy Rick, but the other ones I find a little bit too boring. All right, let's go back to SPX here. What do we have going on? So we did get this nice pop at 10:02. We're giving a bit back. I think
Order filled.
What?
Order filled.
Oh, that was a weird delayed reaction. All right. Obviously, I just didn't get what I wanted. My plan there was to get my stop to break even. And what I was looking for was a recovery on NQ to get all the way back up to the overnight trading session high. I saw it tagging at 29. I put mine up at 25. I was planning on front running it a little bit. But just on the off chance that the VWAP breakout failed, just on the off chance that we're getting smacked at this EMA cloud, that's why I moved my stop to break even. And hey, not always going to work. Money is money, and maybe there's another opportunity. Maybe this recovers and maybe I'm fine and I could take another stab at it. But I obviously always want to just be mindful, just because obviously I saw this pop. You want it to hold. A failed breakout is by definition bearish. We came down, and who knows? Maybe this is a higher low and it pops and it really gets going. That's totally possible. But you know what's also possible? Maybe if I all of a sudden remove my risk, it just plummets because people are like, actually, no, by the time we're looking at this data, we don't like it, and they sell. So whenever I have this opportunity after a pretty decent move to protect myself by getting that stop and that break even, I'm going to take it. I'm going to take it. At least if I'm trading well, I'm going to take it. I should probably caveat it with that. And even right here, I guess I could have gone long again at 34, risking 23. That's possible. Maybe I should do a bit of a sanity check on the options flow. See right here, the SPY, it got that pop and it's still giving it back. It's not really catching its footing yet. We're seeing puts being purchased. We're seeing calls being sold. So I would want to see a little bit of a turnaround, which we might be seeing a bit right now, but you could see what led to that sell-off, and you just never know how big it's going to be. And it just looks in this circumstance as it might have unfortunately just tagged me out, and maybe it's going to keep going. But remember, it's always so much smarter to be protective in this game than anything else. Because if you're questioning how bad it could always get worse. It could always get worse. And even on that pop, where did we get rejected? We got rejected right at the closing value on the Q. So enough people sold there. We didn't get the follow through. And just in case it was a legit rejection all the way back down and we break 622.50, I didn't want to be involved. So if it recovers, remember, when it comes to the world of futures, there is no pattern day trading. You can trade as much as you want, which means you can be as protective as you want. I've moved my stop to in the money. Do I wish I got out here at 69, whatever? Yeah, I mean, 50 points for me would have been 71, so it kind of undershot my target anyway. So it would have been one of those things that if I didn't play it in a different way, I probably would have been really mad that it got that close and I just didn't get it. But whatever, that's trading. I deeply believe that profits take care of themselves. Your job as the trader is to take care of your risk. It is to take care of your downside. And that's what I did. I moved my stop to break even, had a trade, and whatever. That's a decent trade. If I end up I suppose there's a chance maybe that this is my trade of the day. I mean, I made $50. All I care about is making my $50 days, really. Of course, I want it to go higher and higher, but it's this situation right here that all of a sudden, where was my fill? My fill was at 26. I'd be red right now. That would suck. It's one thing to give back profits. It's a completely different thing to give back profits and then on top of that, go into the red. And that's one of my favorite things about trading futures is there is no pattern day trading. You can trade as much as you want to, which I think is awesome. And who knows, maybe I end up getting in on this dip. I'm seeing the SPY took another hit there, maybe recovering a little bit. The Mag 7 drifting down, but showing a little bit of life, but clearly something happened at 10:03 that people started to lock in some profits. So I'm just waiting to see if this overall push and drift to the upside holds. Like, is this just a higher low that we could play off of? Or every single time we bounce, are we going to see another hit in the world of futures? But this mindset of being like borderline paranoid and obsessed with your risk, that is exactly how I got this payout. For those of you who maybe missed the start of the show, last night when I was busy watching Die Hard, I did get approved. Payout approved, 1, 2, 3, plus 12, 15 accounts, $2,000 each. $30,000 payout. Right here, you can see in my Apex, approved. There is 15 of those, 2,000 each, another $30,000 approved en route to my bank account right now. So it is that mindset that in reality has gotten it where, yeah, my accounts are up. They're all up about whatever, $29,000 each starting at 50K. So I believe that I have like the body of work to show that this idea of you should care most about your risk. Profits will watch themselves. I think my success is showing that. And if you want more of a detailed breakdown, we did post a video yesterday right here, how I made $200,000 day trading. So I was up $200,000 in the month of November. I'm up about $400,000, $450,000 in total on these accounts. But in the month of November, the November recap, like I said, $200,000 across all 15 accounts, like cumulatively together. And if you want to know the kind of the breakdown of the strategy and the thought process, the link is in the description of the video. It's the link. If you're on Rumble, the link for Rumble is in the description of the video. If you're on YouTube, the link for YouTube is in the description of the video. So that video is up there on the standalone, the extra channel on YouTube. And then if you're on Rumble, it's on the main channel, but it's this video, how I made $200,000 day trading. Like I said, the link is in the description of the video. So feel free to watch that when you want. And of course, this is the final day to take advantage of the current Apex deal. 60% off all evals with code Goonie. But the cool thing is right here, only a $6 upgrade fee. Lifetime PA. I'll zoom in so you can read that a bit better. Right here, $6. You heard that right. You can be all in on any account size for just $84. Pretty gnarly deal. They're basically just celebrating the fact that they have $600 million in payouts. That is incredible. This is the final trading session to take advantage of this particular deal. Like I said, 16 hours left, final trading session. If you want to take advantage of it, use that code Goonie. But just wanted to put that on your radar. And obviously, those are some of the accounts that I'm using right now. But I also should make it clear that they're not the ones that I exclusively use. I obviously use Take Profit Trader. I use FFN. Recently, I've been hearing better things about Tradeify for them improving it, so I might doing it. And then I also hear some people trying to tell me to try out alpha futures, so that might be something that I'm a little bit interested in. So just want to let you know that I don't think you should have loyalty to any of these guys. I think you should just be using the one where your odds of payouts and success are the highest. To me, that makes a lot of sense. But hey, I guess that's just how I approach it. But like I said, if you're trying to get an Apex account, this is probably the day you should be doing it because this is your final trading session. 60% off with the code Goonie. And when you pass that test, only $6 upgrade fee, $84 all in. Pretty good deal. $60 resets, 1 day to pass, and it is ending tonight at midnight. Where are we at? Yes, you are up 450,000, but can you tell us how much you have spent to make the 450,000? I just watched you for over a year and see you blowing accounts up too. Yeah, I'm greatly. I mean, it depends on what time frame. Do you care about how much I've spent this year or in total? I've been on Apex for probably 2.5 years now. I don't think it's quite 3 years, but I am ahead by multiple six figures. Counting, like, if you look at my career on Apex, I'm ahead by multiple six figures. As in how much they've paid me versus how much I've paid them. I'm ahead by multiple six figures in my entire career. And then that would also inherently, well, not multiple six figures. I think I would have to run the exact numbers for the year 2025, but I'm probably up 100, maybe 200,000. What's the 450? You can't take that money out until you get 6 payments. So the money's in my accounts right now, in my trading accounts, which kind of proves it's not in my bank account. And even though you've been watching for years, it sounds like you haven't been paying attention, because you know that if the money's here, it's not in my bank account. And obviously, if you've used Apex at all, you know that you need 6 approved payouts to be able to take out all of the money, unless they reach out to you early for whatever reason. But you say you've been watching for years, but then you don't know the most basics about how this has worked. I mean, like, literally, I'm showing you right here that the money's in the trading accounts, thus it's not in my bank account. And if you've used Apex, you know that, like, you have to get 6 approved payouts, and then from there you can request it all. What Apex account should I go to? Do whichever one you like. My favorite ones are the 50K account and the 150K account. I think that the 50K account, well, mathematically, it does have the best ratios, but some people don't want to trade micros. They want to trade minis. And at that point, you might want to trade the 150K account. Like I said, my bias is towards the 50K account. And I know many people like the 50K account, but I should also let you know that the people with the record payouts, the record payout people, all have the 150K account. So maybe that means something to you. Maybe it doesn't mean anything to you. But I should let you know that the people with the 1 million, the 2, the 1.5, the 2.2, the 2.3, all those multi-million-dollar payouts, those are traders who were using 150K accounts. But with that being said, I use the 50K accounts. We're getting maybe another bounce off of 25. When you're up X amount on a prop account, is that the actual profit you can pull out, or do you just get a cut of it? It depends on the firm. Firms have different rules at where it goes. So, for example, on Apex, I mean, folks, like, you don't have to, like, just believe everything I say. You could just read it, but I mean, it's literally right here. Receive 100% of the first $25,000 per account and 90% beyond that. So for me, on all these accounts, I started at 50K. I get the first 25,000. So up to 25 or up to 75,000, $25,000 of profit, all the dollars are mine. And after that, it's a 90-10 split with the company. But that's Apex's rules. Take Profit Trader has slightly different rules. Tradeify has slightly different rules. FFN has slightly different rules. But all this stuff, like, they're not hiding any of this. It's like kind of right in your face. You just have to do like a little bit of research on it. But anything I say, I do implore you in this particular world of trading gurus and furus, fact check me on it. Like, maybe like kind of trust but verify. Obviously, I do my best to give you guys like fully accurate and vetted information, but I'm human, I'm fallible. I'm sure sometimes I misspeak or maybe I misinterpret the question. But yeah, on Apex, the first $25,000 per account, like, this is one account, this is one account, this is one account. Per account, the first 25,000 is yours. And then after that, it's a 90-10 split. But remember, you can only take out on a $50,000 account, you can only take out $2,000 at a time for this first 6 payout requests. And then after that, you can request the whole thing. I know it's unrealized. I'm not talking about your unrealized. I'm talking about the money you have taken out. I see you have taken out 250K up until Feb. Now you've taken out 2 or 3 payouts this round. Yeah. So I've taken out $300,000 this year, and that's just this calendar year. And I have not spent $300,000 on fees. I should have probably done that. It's not that far off. And then obviously in my career, I've taken out even more. That's just this calendar year. On Apex, you use the full or the static? I don't use static. Heard stories of people getting screwed over by these prop firms. There are scummy prop firms in the world. That does exist. But most of what I see are people who are shit at trading, and then they blame the fact that they're shit at trading, which is the real reason for their lack of success, rather than the firm. They're like, oh, like this firm screwed me over. It's like, no, you blew out your accounts because you don't know how to trade. Like, that's just what it is. So I'm not defending all prop firms. There's many prop firms, and some of them I've seen clear-cut evidence that they're scumbags. Like, I'm not saying that that doesn't exist, but in terms of the ones that I use, I mean, I've been on them for a while. I've tested them. I've researched them, and I can tell you that the ones that I'm currently using, and of course, this world is dynamic. Things change all of the time, without a doubt. I'm not being ignorant of that fact. Things do change, but at this moment in time, as of December 9th, the ones that I use are ones that I trust. And if they do something to break that trust, I'm not going to use them again. It's honestly that simple. But I hear people bitching about Apex because they don't follow the rules. Like, I've never heard of a single person on Apex that is denied a payout if they follow the rules. But yet, if you like, random people on Twitter will have you believe that that happens commonly. No, it doesn't happen commonly. If you follow the rules, you get payouts. I'm proof of it. I've requested 4 times for the lifetime of these accounts. 2 of them have been denied. I knew I broke the rule. I wasn't bitching and moaning about it. I knew I broke the rule. The other 2, where I thought I broke new rules, surprise, surprise, I got the payout. Like, it's just like, it's that obvious. But a lot of people don't want to take ownership of their own decisions, especially when it comes to trading. So they basically just try to blame someone else, and they make it seem as if it was out of their control that they somehow blew out their accounts or didn't get paid this, that, or the other thing. If you're going to have that mindset when it comes to the world of trading, what are you even doing? Because you're always just going to be blaming your missteps on someone else, which means you're never going to get better as a trader, which means you're only going to be perpetually losing money, which means why in the world are you playing this game anyway? It just doesn't make sense. You have to have that, like the ownership mindset of like, nope, this is like what's in my control. I'm doing everything in power to like do quote unquote, handle what's in my control well, and you go from there. I'm just so sick and tired of these retail traders trying to blame everyone else for their missteps, when in reality, great, go like cry to whoever wants to hear you whine, but at the end of the day, it's your money. So like, you don't get your money back by bitching. Like, you're maybe psychologically feeling a little bit better because you were able to blame an other for your issues. But if you ask me, it's silly. Hey, Matt, have you gotten payouts from Take Profit yet? Yes. Would you be able to upload a video of them similar to your videos of Apex you've made? I can, but from a content perspective, it's less exciting because I only have 5 accounts over there. And right now I don't even have funded accounts. I just have evals right now that I'm trading. That's these 5 on the bottom of your screen. I'm working to get these passed. They're about halfway there. The fact that there's 5 accounts, the videos from a content perspective do not as well, just because you're allowed to trade up to 20 accounts on Apex. So if I trade as well on Apex and as well on Take Profit, I'm doing 4x better from a nominal value on Apex. So the videos just tend to do better. So from a content creation standpoint, I'm more inclined to make Apex ones just because the numbers have like more of like that wow factor. Like, you have better thumbnails, you have better titles, but at the end of the day, they're the same thing. Like, they're SIMDA funded firms. Take Profit Trader and Apex have very similar rules. What I like about Apex is you can trade more accounts. What I like about Take Profit Trader is you can get daily payouts. You can't do that on Apex, but on Apex you could have 20 accounts instead of 5. So that's why I use them both, because I see advantages of both and I try to play them off of each other. I was funded on my funded futures and took a break and didn't know they would get rid of funded for breaking guidelines. Pretty upsetting. Yeah, it sucks, but to be fair, and I don't want to defend my funded futures. I don't use them, and I don't use them for a good reason. There's other reasons I don't like them, and I don't think anyone should be on my funded futures, and I don't think anyone should be on Top Step. I think those are horrific platforms, and for a while I thought that about Tradeify, but recently, because of some of the rule updates, my mind is changing. But my funded futures and especially Top Step. Top Step is toxic. Those coaches have been proven to give people tips to blow people out, because remember, the Top Step coaches are getting paid by a company that makes money when people blow out. So do you really think their coaches have your best interest in heart? Think about this, folks. Top Step runs a live show where they're trying to teach you how to trade, and yet those coaches, the people running the show, are getting their money from a company that benefits from when you fuck up. Do you really think that they have your best interest? And then from there, if you watch it, they're losing money. So anyone with a functioning brainstem should probably quickly realize that that's not where you want to be, because they're always perpetually losing money. And then if you look at what's going on with Project X, every other day it is having technical issues, and people are always complaining about the platform going down and they're not getting their accounts. And then if they fight enough, they get their accounts back. It's horrible. And they also have a daily loss limit on one of their platforms, depending on which one you use, which is completely predatory. So I will not use Top Step unless they dramatically change their rules, which are just like clearly made to make you fuck up. And also I want them to get rid of their dipshit coaches. Like, they're the worst traders there. Like, you know the saying of like the one thing you can count on is death and taxes? I think the third thing you can count on is Top Step coaches blowing out accounts and losing money. They absolutely suck. They are some of the worst traders I have ever seen. And yet they try to cosplay as if they're serious players. They're fucking jackasses. They're all jackasses. Funded Futures Family, well, they were proven to be scammers. They were run by two kids. Like, it was just like little asshole kids. Oh brother. I could have gotten in at 37, 38. It's trading at 46, so I'm behind by about 10 points. You don't have to listen to the coaches. No, you don't have to listen to the coaches, but then you could look at the rules of the platform and realize that they have shitty rules. If your goal of a sim to funded trader is to get payouts, it is easier to get payouts on other competitive platforms. Look at their rules. Like, I don't know what to tell you. If you think their rule set is increasing your chances of getting a payout relative to their competitors, I almost wonder if you've just ever seen their rule set. Like, as soon as you realize that they have a daily loss limit, when they have a daily loss limit, and on top of that, you can only have, 5 accounts? It's stupid. It's dumb, but whatever. I mean, if you're getting payouts, congrats, keep doing it. Don't let me stop you from having a good time. But if you're here arguing with me that it's a good platform and yet you're net behind and not getting payouts, who's the crazy one in this situation? Like, it doesn't even make sense. I feel like you're in here trying to defend them and yet you have never gotten a payout from them. Fuck. Do I want to take this risk? What's VWAP is right at 41. Come on, I want to see it dip to 40. Why do I have Nvidia up twice? That doesn't make sense. All right, here's a look at options flow. Max haven't popped, going flat. S&P 500 is still dipping, but maybe it's finally going to show a little bit of life here. We're right at 6850, key psychological level, probably key gamma level at this point. It's also the 50 EMA. Where are we here? Dude, that SPY got hit, but the Mag 7's holding. Do we have any new plays? No, 45 is the pivot point. It is the evident pivot point, 60, and then it goes all the way up to 90. It goes all the way up to 90. VWAP is right here at 41. Okay, this might be my time to shine, folks. This might be your boy's time to shine. We just got hit. We're right at the... Oh, wait. All right, this is changing things. I thought it was going to give us a little sweep to like 30, maybe 37 or 40, somewhere in here. So I guess we have another fake out breakout because that just got smacked. We're just having a tough time breaking this range. You could see we popped up, we pulled back. We were range bound. We popped up, we pulled back, and now we're legitimately still range bound. Got a 5K max payout last week from them. Only took a day to receive the funds too. Too much Top Step hate. It's because they suck, dude. Like, it's not some big brain conspiracy to figure out. It's because their technology is shit. Their CEO is a fucking loser dweeb. Their coach is below. Like, what is good about it? Like, it's just, you're saying because you got a payout, by definition, it has to be good. That's stupid. That means like using that logic, what if you buy a penny stock and you make money, is that now a legitimate company that we should all be investing in? Like this, come on. Like what is this logic? I got a payout. I would agree though, one knock against Apex is how long the payout request window takes, but that's why I use multiple platforms. And once again, Take Profit Trader, a lot faster, you get daily payouts. What I do is identify the group of firms that I think have reasonable, acceptable rules for me to be successful. And then from that moment, I use them all and just take advantage of the pros of that platform and of that firm, and then hope that the like cons kind of cancel each other out.
Order submitted.
All right, things are getting a little bit more whippy. Things are getting a little bit more whippy. 55. So we have this support at 45. What's the 1 minute looking like over here? Really messed up. This is your gamma map, by the way. So you have this clear positive gamma node at 6845, 60s right there. But then if that breaks and goes, we might be talking about 80, 90 all the way up here. Looking at the full, oh, whoa. Okay, so right here, big flow alert on the S&P 500, 1027, and then all of a sudden we have some life to us. Look at that giant spike. 0 DTE calls being bought like no other. 0 DTE puts being sold like no other. Delta getting a huge pop, and just like that, we went from an intraday Delta low back to about a 50% recovery. That's crazy. That's a big shift in options trades hitting the tape in real time. The question is, does it have any legs to it? And then the Mag 7 held that entire time, and we basically just made a new Delta high. What time frame do you use the most? I'm a believer that there's no singular time frame you should be using. I think you should use multiple and look for the confluence or the divergence of them. So if I'm day trading, I'll use the 5 minute, the 10 minute, the 30 minute, and I look at those together. If I'm swing trading, I'll look at the 4 hour, the daily, the weekly. If I'm scalp trading, I'll look at like the 1 minute, the 3 minute, the 5 minute. I'm not a believer to use a time frame because I think you get so much more useful information from using multiple time frames. All right. I like that. Mag 7 is going. S&P 500, a nice pop right there. We are seeing no real net difference in the New York Stock Exchange at this moment. No real difference. All right, did we take out that high? I need to stick to my system. Obviously, I'm not in love with it, but hey, the system is the system for a reason. I wish I had a fill below 50 just so I could be protected by this 48. I'm looking for this to take out 70, 71. It's this intraday high over here that we got at 1003. And then obviously at that point, I'd be moving my stop up to break even. Part of me almost wants to do it now. I just don't know if it's going to have one more pullback before it does this. To VWAP. I could move it up to VWAP, but we just kept undershooting it. Such a pain in the ass. We just tagged it. Part of me was thinking 47, this dip low. How do I want to play it? Wow. We're getting whippy today. It didn't move enough for me to move my stop to break even. I guess I could have been hyper aggressive with it, but just at that point, the odds of it getting hit are relatively high. Wow, we are right back to this thing is just hugging VWAP like no other. We just keep oscillating around VWAP. 37. 400. Do I want to risk $400? Do I want to add one here if we start to go? Oh, that's the question. Do I want to add one right now? Yes, no, maybe so. What's the trend looking like? SPY did pop. Mag 7's looking decent. Let's go to the 5 minute on all of this. Let's go to the 5 minute. Let's go to the 5 minute. Oh, by the way, all this options flow stuff that I use, whether it's the Mag 7, the S&P 500, the Gamma Map, I think it's an invaluable tool. Remember, you can get 80% off Spot Gamma. That's the name of the platform. Pinned to the top of chat in the description of the video. We are the only community that they offer this to. You can check it out. Like I said, 80% off. We're the only community. You get all this options flow. You get the vol stuff. I mean, it's the best options analytic platform available to retail traders. And that's coming from a guy who I've paid for all of the platforms. And I can tell you, it is so far away to get to the second place. Like Spot Gamma is a full-on tool, amazing options analytics tool. And if you want to take advantage of it, like I said, pinned to the top of chat in the description of the video, 80% off. I think it's worthwhile for everyone to give a test drive. I honestly, I'm at the point in my career where I refuse to trade without it. I don't know how you could trade without knowing options flow. It blows my mind. And well, I guess you could. I would just be prepared to lose quite a bit of money because you're just missing so many insights of, damn, I should have taken that trade. I was thinking about taking this breakout, another one at 48 and dumping it at 60. Because then that would lower the average on this one all the way down to 38. So then I could risk it here for free after locking in some money. Ah, man. I was close to doing it. I was going to do a long at 48 and I was going to dump it at 60. Because then that means that my risk here was basically 37. I can move my risk up there and then all of a sudden it's a freebie play. All of a sudden it's a freebie play. Apple looks bearish on technicals, can't hold 280, probably getting hawkish Powell, forming head and shoulders, possible retrace to 50 EMA on hourly and daily. Thoughts? You think Apple looks bearish? You think this looks bearish? This thing that is exclusively from June of this year, exclusively making higher highs and higher lows. It's above all the EMAs. This is what's looking bearish to you. I mean, I guess I must have missed the memo on the definitions and bullish and bearish overnight. I guess I must have missed that, but I must have missed the pivotal update. Folks, please, when Webster Dictionary changes the definition of words, please let me know. I would appreciate that, just so I don't get embarrassed on the show about what these words either do or don't mean. Because when I went to bed last night, we had different definitions. And I maybe the definitions did. I understand linguistics. It changes. It's a field that updates and it adapts to current culture. And maybe I just missed it. Maybe that's fair. That there is a non-zero chance that overnight Mr. Webster and Mrs. Dictionary changed the definition of that word. And I guess I must have unsubscribed from the newsletter. I must have missed it. And I guess that's on me. That is 100% on me. Oh, what are we seeing on Bookmap? Point of control is at 40. There are some sellers that were at 67. They just moved them up to 76. And now they just moved them back down. So we're getting a little bit spicy with it, I suppose. So VWAP is at 41. Point of control is at 40. So that seems to be a pretty important equilibrium point. But I keep seeing they keep moving them pretty rapidly. Like right here, as I've been showing you this deep red of where we have sitting sellers, they're all over. Like it just keeps moving it every couple seconds. Right there, it was at 75. Then they moved it to 70. Now they're moving it up to 80, back down to 71. It's all over. And judging on the size, the fact that it's 100 contracts, I would assume it's the same player. Now, obviously, it doesn't have to be. There's I guess a chance that this is just different players magically throwing up and then moving it. But I think this is the same player that has 100 contracts and they're just dragging where their sell target is. It's crazy that we get to watch this in real time. It's actually kind of fascinating. My assumption is that it's the same player because it's seemingly 100 contracts. Right there, boom, 100 contracts. They just keep moving around. That's so, what the fuck are they doing? Are they high? Like, nah, they'll never be able to catch me. They just keep moving it. Do those move based on an algo? They can, if the orders are being placed by an algo, of course. It could be a manual trader. I know of no system that shows you the sitting orders that are based on manual trades versus algo trades. All we see are just sitting orders. They're nervous. I mean, it could be a high frequency trading firm. It could be that. It could be someone spoofing. It could be a manual trader. It could be a group of traders. Like, you just don't know. All we can definitively see is those are sitting orders. As to who's moving them and why they're moving them, well, you'd have to go ask them. You'd have to go ask them. Little point of control. That's weird, though, to see that. Mag 7 is still climbing. S&P 500 did pop, pulled back a little bit. Maybe this is a higher low. We're kind of going flat on both. Tesla's taking off. Nvidia's going flat. Apple's taking a hit. Tesla, I already said, is looking good. Microsoft going flat. Meta trying to recover. Google pretty much going flat. Palantir did pop, ran into a wall at 182.50. Avago's looking decent. Tesla seems to be the belle of the ball today. Bitcoin catching a bid for sure. For sure. We're slowing down. Not like I see the Mag 7 trend is looking very good, but price just isn't really doing shit. Once again, this beautiful Mag 7 flow, S&P 500 flow, the gamma charts, the delta charts, all that stuff. It's spot gamma. This is the best options analytics tool. It is second to none. Check it out. 80% off. Link is pinned to the top of chat. SPY's taking a little bit of a hit here, maybe making a quick return to this green to red test, maybe the closing value. The Qs are holding. Bitcoin's popping. Tesla's holding. Nvidia is holding. Apple is getting hit. Microsoft is also. So Nvidia, maybe, there's a little bit of a deviation. Something just happened. I'm feeling, fuck this. All right. I'm front running the strategy. I don't know. My nerves are kicking in about what the fuck is happening today. Stops at break even. I don't care. I'm front running the stop movement. I'm literally showing you on the screen where I had to put my stop to break even, but something's mismatched here. Something doesn't feel good. I see the SPY kind of trending down. I just want to protect myself, and whatever, if it goes in my favor, I just something feels off. Maybe there's a rejection here. I don't know. Anyway, all I can tell you is I took all my risk off the table. If it goes, it goes. Awesome, cool. I'll make money. If it comes back, whatever, I'm up my $100 per account on the day, and I can move on with my life. Why? This was supposed to be trading at half size, and it is now. But the first trade, it wasn't. Why did I make $100 on all the accounts, but then on the second trade, these are at half size? They were supposed to all, these ones down here, these 5, were supposed to all be at half size because I'm trading MNQ, while up here I'm trading NQ. Obviously, I'm trading 5 MNQ to be clear. Something, cup and handle. I mean, it could easily pull back, knock me out, and run. Do I just want to take this money? I could just close it right here. It feels like it's coming for me. And I'm not even protected by 50. My stop's at 50.75. Well, there were people at 55 for a second. It needs to take out that guy, dude. Whoever this guy is, they're just fucking with us. You can see it's not 100 lots anymore. Now it's a 50 lot position, but they just keep ping-ponging it around. Are they just bored? Are they as bored as we are? Is it one of you guys in here who has a 100 lot position and you're like, nah, like, let's just fuck off. Let's fuck with Matt on the show today. You guys, it's something. All right, Piper just fired if you're in the Discord. And for those of you who aren't in the Discord, tough tits. All right, once again, my stop's at break even. My reach target, so I could watch 700, but I really kind of like this idea of 70 right there. And why I'm looking at that level, that actually is a technically important level. It is the overnight high. The overnight high basically hit 29, so I just threw it in at 25 just in case we get going. I guess I care about 700, 710, and then 725. So if things look a little bit weird at 700, I might just close it there. What is this? All right, my stop's now in the money by 5 points. So no matter what, I'm making $100. So hey, our effort was worth it today, making another 100. So this is going to be my last trade of the day, at least on these accounts. What do I want to do? All right, we're making some money moves over here. Making some money moves. If you are in the Discord, I'm playing an aggressive form of Piper, and I'm throwing that screenshot in right now. All right, I just want to make sure I did that right. Okay, I did. How are we looking? Once again, if you're in the Discord, Piper fired, and also my 0DT trade was in there. And then for all of you on stream, you already know that I'm long at 50. My stop's at 55. We just hit 80, dipping down to 70. Oh, brother. So that was that recent high. Obviously, 700. Oops. Obviously, 700 is important. 712 is important. And then 730 is important from a technical perspective. But the way this is going, I might not have a shot to worry about those levels because that was a pretty strong dip. We dipped from 83 to 58 like it was nothing. Once again, my stop is in the money. So whatever, if I got hit, of course I would like for this to go. I would be a crazy person to not say that, but if it dips, it dips. Sometimes variance isn't on your side, and because you never know when variance is or is not going to be on your side, if you have an opportunity to protect yourself, as in moving your stop to break even or even getting your stop in the money is even better. Hey, have at it. Have at it. Have at it. Of course, I love the days where I'm in here and I quickly make $1,000 or $2,000 per account and it goes. And if you're thinking that you can replicate that every day, you simply can't, because not all trading days are built the same. We have different events, we have different option flows, we have different technical setups, we have different macroeconomic announcements. So if you're coming in and you're like, oh, I'm just going to get this amount every single day, and like that's how it goes. I mean, if you can pull it off, like, hey, all the power to you. But I'll just let you know that no one in history has ever pulled that off before.
Order filled.
And today is just not that day for me. Today is just simply not that day for me, but that's all right. Unfortunately, that means that today's a bust and tomorrow's going to be a bust, because tomorrow's FOMC, and I do not do well trading on FOMC days. Fuck. Look at that pop. Wow, it got smacked right there. Another, look at VWAP test. Are we just doing it again? On this breakout of 50, if you're okay risking 12 points, you could risk that recent low. Let's look at, wow. someone's unloading. Whoa. SPY just a puke starting right at 10:45. Look at that puke. What is happening today? So people are buying calls, selling puts, then they're buying some puts, selling some calls, then they really are buying calls and really are selling puts, then we do nothing, and then at 10:45 they decide to puke their calls and buy puts. Like, look how jagged and messed up this is. We pop, we drop, we pop, we drop, we pop, we drop, we pop, and then we really drop. And that whole time, the Mag 7 is just climbing upward. So this is making me feel as if the bullish side, the bullish bias is still the correct bias, because the bets on Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, which have an outsized effect on the SPY and the Qs, especially the Qs, is still grinding higher. But man, it is not an easy path. It is not an easy path by any means whatsoever. Holy cow. Holy cow. I mean, like I said before, when I said something feels off, like just there was something weird in the ether, we overshot this green to red move and then boom. But here, maybe this is just a retest of green to red and it just bounces, and like we could totally rip off of that, and I wouldn't be surprised if that does happen. Bitcoin is also showing that people are risk on today. So when I see Bitcoin's movement, when I see the Mag 7 movement, I have hopes that this could recover, but it is no easy path today. It is no easy path today. And that is another perfect example of why the end all be all is your risk. If you are not watching your risk, oh, actually, that sucks. So right here, I was talking about the breakout. It never happened. It dipped another one. So you'd buy the breakout here at 45, risking 35. 10-point risk, that's acceptable. If you're trading in a way that you can't take on a 10-point risk, you probably shouldn't be trading NQ, because we moved 10 points like it was nothing. That's a bummer. Not really, because I would have been red, so I would have never held it. I was in at 50. It dipped all the way to 35, so I would have been 15 points in the red on a potential VWAP breakdown. And of course, in this example, it did bounce back, but I could also show you countless examples of no, it breaks VWAP and it keeps going. So I actually love my protection there. I love how I played it there. And I guess if you think I should have just randomly held it, well, I'll trade my accounts and you could trade your accounts, but all I could tell you is I'm up $500,000. So I have, yes, now with this, like, hindsight bias is always 20/20. But if I show you this right here, like, let's just say we froze data at 10:48. If I asked you, is this bullish or bearish? Half of you would be right, half of you would be wrong. But remember, having a win and it recovering is mathematically very different than suffering the same size loss, because obviously if you have enough losses, the game's over, but you could theoretically have an infinite amount of wins. So this is a 50-50 shot, and I don't want to take a 50-50 shot when I'm already underwater. It's one thing if I'm 50-50 and my stop's at break even and the other 50% is like me winning, but right there, it's underwater. And what, am I going to cut it at 25? I'm in at 50. I lose $500 per account when I'm already having like somewhat of a decent green day. And yeah, now that I see how it played out, of course, if I had a magic ball that promised me this was going to come back, yes, what I would have done is right here at 41. If some, I don't know, clairvoyant told me, I would have added on 9 contracts. I would have maxed it out and I would have rolled this puppy up. But the point is you do not know. And you have to just be aware of the things you don't know. And the next bar has that 50-50 shot. Yes, we got to a key level. Guess what? When you get to a key level, there's no model in the world that tells you breakout or breakdown. All you can do at a key level is pay attention. In this case, the bulls show dominance. Great, it bounced. Obviously, cool. This time frame, things are bullish. There are countless examples of it comes here, it retests it, and then it pukes, and we just all of a sudden go from a potential bullish trend to a potential bearish trend. And if I held that bullish position, it could have just kept going and going and going. And knowing myself, those are the times that I just get completely tilted and get fucked up. So it happens. It happens. My point is you can't judge yourself for this because of how it would have turned out. You have to judge yourself on the decision at that time. And the decision at this time was I was able to get out when it broke this low for a little bit of money. I took the green, I guaranteed the green. And at first I felt phenomenal about it because it went down. I would have been break even. Then I would have been red. 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 And then just by pure luck, the 50-50 shot, it ended up bouncing. And if I held it, yeah, then I could have been back to break even. And right here, I'd be up more than I was. Obviously, I got out at 55. It's trading at 72. So let's just call it 75. That's another $400. So, okay, I'd be up around $500 per account, which is obviously better than the 200 I'm up. But still, are you judging the quality of your trades on the outcome, or are you judging the quality of your trades on the decision making involved in that process? And for me, even though if I'm judging it on the outcome, I could have made more money if I held it and if I added and then I kind of prayed and blah, blah, blah. But in terms of the decision making, I would strongly argue I made the right decision. And especially for the people who are maybe newer to the show or just needed to be reminded of this, that's what a good trader is. It's a person who perpetually makes good decisions. It's not exclusively based on did you only make green profitable trades. If that's your judgment, you're not going to ever be happy because about 50% of your trades are going to be losers, roughly, give or take about 10%. So if you're looking for perfection and you're defining perfection as only profitable trades, trading is not for you. It's literally impossible. If you're looking to be a trader and you're defining perfection as only making good decisions, well, that's what, in my opinion, you should be doing. And that's exclusively what all the best traders do. You're so helpful. Thank you for your hard work and congratulations on your well-deserved success. Been watching you for years. Oh, that's so kind of you. That's very nice. Even that, you could have taken the trade at 75. Are you willing to risk 67? It's just like truly, especially in this sim to funded futures game, it's honestly a game of time and time again asking yourself, are you willing to take that risk? Yes or no? If you got in at 75 on this breakout, are you willing to risk 67? It's a yes or no question. If you are, great, have at it, 50-50 shot. If you're not, then don't take it. Or if you like it, but you want to size it down, okay, great, size it down. That's all it is. It's all it is. And if, like I said before, it's in the description of the video, but I made a video yesterday and I posted it, and it's on Rumble and it's on YouTube. But this video is, I think is a 20-minute. Yeah, this is a 20-minute explanation on my mantra of how to approach trading, and it's more of an in-depth discussion of what I just gave you. So if you're a person who's interested in sim-to-funded trading, or if you're sim-to-funded trading, but you're not really getting the success you want, I'm thinking you should watch this video. First of all, there's no harm, no foul. Like, it's not going to cost you any money. It's a free video, but I think it can help rewire some of your framework of how to approach this game, because I think right now social media is building up this concept of, like, to be this good trader, there's some unknown puzzle that once you figure it out, you're just making money all the time endlessly and you never take any losers. And if you hold yourself to that, you're going to always feel like shit because you're going to be looking at all these people who are legitimately lying to you. Like, they are straight up fucking lying to you. And it's honestly horrible. It's truly horrible. I know we're getting to the end of the show, but I am willing... Someone sent me this video the other day of a person who I believe is not only a creep, like a legitimate just creep of a human being, but apparently he's a bigger scammer than we all expected. Do you guys want to watch that? We could do a live react together. I haven't seen it yet, but there is a player within this space who's like, he's small, but some people know about him. But it turns out like someone just made a whole video explaining, and apparently he blew up a hedge fund. He took money from lawyers, blew it up. He's paying for, I guess, like responses to his Discord. He's paying for like views. You guys want to get into a little bit of drama today? And you guys want to learn about one of the biggest scammers in the sim-to-funded space? All right, I'm seeing a lot of yeses. All right, let me track it down. Someone sent me the link. I wanted to save it. Basically, if you guys didn't want to watch it, I was just going to watch it by myself after this. So I figure, why not play it in real time? Let me find the link. I saved the link somewhere. Here we go. Where is it? Why can't I find it? Oh. I think did I save it on Twitter? Watch here.
Stupid fucking influencers out there.
Okay. Found it. I found it. Ladies and gentlemen, someone has sent me a video explaining and kind of getting into the world of the biggest scammer in the sim to funded space. And before I get into it, I just want to give a shout out for all this research and the great video, The Internet's Boogeyman. The video is The Shell King, How Rocket Scooter AI Built a Scam Empire and Blew It All Up. So before we get into it, I'm going to like it. I'm going to subscribe. I recommend you guys all do the same. This is not my effort. This is not my work. It was just sent to me and people said you should watch it because this is a person who happens to be in the space. And when it comes to this world, we know there's a lot of gurus and furus, and it is people such as this that are going to probably ruin the game for all of us because one bad apple ruins the bunch. I know this Rocket Scooter AI, just from the small amount of interactions that I've had with him, that I've seen other people have with him, and that I've just learned about myself. I already knew he was a scammer, but the DMs I've been receiving and some emails I've been receiving is apparently this guy is a bigger scammer than I could have ever imagined. So I think we should kick back and watch it. We'll do a little bit of a live react, but once again, this is from The Internet's Boogeyman, so all props go to him.
Pushing codes are getting regulators to look at this industry. All these little small time dipshit fucking losers out there trying to push codes to make a buck. If you understand my kind of dislike and distaste for these, like, you know, small time, they don't trade, they don't do anything, they're just trying
And even worse, he's a Cowboys fan.
to make a buck out of you guys.
Day Trader Paradise, identity number 1.
I don't care if they're nice on Twitter, oh, they're a good community, or whatever. Fuck them and they're a good community. They're lying traders, they're fake traders, old fucking grandmas and fucking nobodies sitting there pumping affiliate codes left and right. So remember,
Pumping affiliate codes left and right. Literally look above his head and look below him.
protests against
All
these
he's
influencers
doing
on Twitter, like
is
a really
pumping.
strong
Look at-
stance against this influencer community.
What?
I don't care. People are like, come on, man, they're a good community, they're nice. No, fuck that.
Coward trading.
Like, literally, fuck all your feelings. Like, who the fuck are these people? Like, no, you guys are retarded. These people are like a plague to the industry. Dude, they probably make like $10,000 a month on affiliate codes. They probably scrape together a salary.
Rocket Scooter AI. So he just has a lot of names.
Losers leeching whatever dollar they can get. Yes, beef with them all day long. You know the Influencer Cup? Did you know the quote-unquote tournament? It was literally the biggest display of dog shit trading I've ever seen.
What's funny about him is he only exclusively wins sim to funded trading. All of his trading is completely fake. And I actually have seen this before, P&L history. This was him blowing up a hedge fund. He lost all of it right there.
You know who
Blew
was
up.
in that was important? Nobody. Pat was in that contest. Matt wasn't. Rips wasn't. I wasn't. Nobody that actually does things in this industry correctly has a big following.
He literally took another person's
Stuff
name.
like that, 'cause they're trying
Trades
to
by
scrape the
Matt.
dollar.
It's a completely
The upper
individual
echelon of people,
person.
the people that make millions of dollars a month, not 10,000 a month. They see
I like
the
this
names and
editing.
that kind of thing. These people need to go away completely. They don't deserve to be here.
The Final Four.
Just so they can make like a $50,000 a year salary. None of them are traders. They have small, tiny communities. 1,000. We got the Twitter account of 600 people in the quote-unquote Influencer Cup. Like, bro, I challenge you one-on-one to a $1,000 trading competition. 10,000 or something small, and I'm like, all right, yeah, I also challenge Elon Musk to a $10,000 Scrabble match. I'll let you know when he gets back to me.
That's funny because this nobody challenged me, and I'm way more dominant than him in all forms of social media, and I'm obviously also just a better trader. So he's complaining about nobody's challenging him to trading, and then yet when he does it, it's completely acceptable when he in himself is a nobody. Probably many of you are watching this right now thinking, I've never heard of this guy. I don't know the name. I don't know who he is. And you're right, because he's a nobody, but he's acting like he is the guy when it's all fake. It's all smoke and mirrors. The fraud.
I want you guys to be very hateful towards these kind of people for their selfish behavior that's going to make it harder for you to get funded. This isn't a world where influencers...
He wants you to be hateful? Oh. Well, I guess by that logic, I would say all of you watching this should be hateful towards him. You should take his own advice and be hateful towards the people ruining the industry for all of you, which would be him because he's a scammer. And I still want to point out that he is continually complaining about people hawking codes. And look, it's still just another code, another code, another code.
Should be able to exist. So let's eliminate all of them. I work for My Funded Futures. I go to the team meetings every week. I'm in team meetings with Elite Trader Funding. I'm in team meetings with Funded Next. This is executive meetings with executive.
I'm in the team meetings. I'm so important.
All these people and the influencer
I'm so
are like
important.
still 1/10 of our customer base if you add up all 40 of those people. So they're like tiny and small. Yeah. So no, my goal isn't to go out there and buid a community of small-time influencers to help them get ahead in life. They don't deserve to be here. My greater goal.
They don't deserve to be here.
Eliminate them from existence.
Get ready for one of the biggest frauds that we've seen in the day trading space. My goal is to eliminate them from existence. Tough talk for an absolute nobody.
Actually trading a real account. You say that, like literally all I have to do is call my lawyer and I'll fuck your life up. I'll fuck your credit up. I'll fuck everything up. Just one phone call to a lawyer if you say another libelous comment like I'm playing with play money. You think I'm kidding? I've made StockTwits traders disappear from StockTwits. You say one more libelous thing.
What a fucking pussy, dude. When people try to talk this tough, they're fucking nobodies, man.
Everybody, y'all heard him say play money, right? He's calling me a paper trader. He is literally creating libel that's $1 million a year.
He's a paper trader. This scumbag fraud is a paper trader. I'll say it. It's evident. We all see you on sim fake accounts. It's not hard.
I'm gonna sue you. I wonder how much business loss I took to this. How much physical loss the company's taking based on his libelous claims? How much do I want to sue him for?
Wow.
The problem is that the judgment would be worth $1,000 my lawyer would charge him for the cease and desist because he's a kid with no money. I can't really chase a kid out. We can just get him banned from StockTwits, which we've done to people before. And then he just disappears when he realizes the IP ban and he can't start another account. But whatever. I just like to talk shit.
Fraud is usually loud. It brags.
This editing's really good.
It shouts its victories and whispers its losses. But every now and then, you stumble across one that doesn't whisper at all. It just goes silent. $400,000 gone. 15 investors vanished into a spreadsheet graveyard. A trading account that once claimed to be $600,000 strong. Collapsing in a single vertical line straight to zero. No warning, no explanation, no accountability, nothing but the echo of promises made and the screams of bank accounts emptied. This wasn't a rug pull. This wasn't a scammer caught off guard. This was something stranger. A man buried under so many layers of lies that the truth could no longer remember his name. Before he called himself Trades by Matt, before the YouTube channel.
Which is a different guy, to clarify. Trades by Matt.
Before the confidence.
Is a different dude.
There was someone else. A man behind the curtain. A man behind the mask.
This editing's pretty wild.
A man behind multiple masks. John Matthew Cowart, a trader with no track record. A fund manager with no discipline. A guru with no accountability. A man who didn't just blow accounts. He blew entire identities. Every time the money vanished, a new name appeared.
Order filled.
Order filled. Matt is definitely somebody. He has like 4 followers. And he's also a fraud.
Every scam starts with a promise, a dream, a place where the money is easy, the strategy is simple, and the lifestyle comes prepackaged with palm trees and motivational quotes. For John Matthew Cowart, that dream had a name. Day Trader Paradise. You have to admire the confidence. Calling your company Day Trader Paradise is like opening a food truck called 5-Star Michelin and selling expired hot dogs. But Cowart knew what he was doing. He wasn't selling a product. He wasn't selling education. He was selling the fantasy that trading could save your life. A fantasy where you quit your job, you fire your boss, you make thousands a day, you trade smart and live free. And people believed it. Because people always believed the dream long before they ever questioned the man selling it. Day Trader Paradise wasn't just a Discord server. It was marketed like a family, a movement, a digital church of greener pastures. But there was one problem. The congregation was fake. Former mod John Tyson confirms.
John Tyson.
Students. Fake accounts pretended to be profitable traders.
What did he say? Mods posted as, like, acted as students.
As students. Fake accounts pretended to be profitable traders. Reddit burners.
Well, that seems suspicious, especially when it's a paid service.
Hyped the brand. He even had unpaid volunteers sign non-disclosure agreements or an NDA for a Discord room. Seriously. Imagine running a community so fragile that your moderators need legal paperwork just to pretend it exists. I know I give these Discord subsellers a hard time, but fabricating success and manufacturing a community with throwaway profiles is diabolical. It's narcissistic. It's the building blocks that establishes a pattern of deception. This man had even went as far as to join the Robbins Cup and drop out early and act like he was some champion. All of this was further fuel to build the brand and the illusion that he was some professional day trader.
I quit the race at top 5 and announced on my stream I was quitting. It was a tournament where 20 famous traders on Twitter claimed to enter, and when all of them pretty much said they backed out, I had no desire to babysit a 10K account all year. Or maybe it's more likely that you just blew it out. But hey, everyone always has an excuse.
This is very important context for what's coming. When we look back in hindsight and wonder how all these people managed to fall for this, come back to this section of the video.
Five-star Michelin. This AI edit stuff is getting crazy. Kind of has a Call of Duty, like, zombies vibe to it.
Got a special today tailored just for you. It's a dollar store fantasy, a 5 and dime wish. Serve right up with a smile on a pale blue dish. We're selling drinks today.
Definitely gives me a creepy vibe, dude.
Come on and get your dreams oh so sweet. Dreams for you.
The girlfriend, the law office, and the pipeline of
Here's
trust.
where this team gets clever in a deeply unethical kind of way. Cowart used his then girlfriend, a paralegal, to pull attorneys from her firm into his ecosystem. Not as students, not as community members, but as believers. Nothing says, trust me with your money, like meeting a guy through the woman whose rent he's living off of. Attorneys who saw a polished brand, a tight-knit community, a charismatic trading expert, a growing following. They saw Day Trader Paradise as a sign of legitimacy. They didn't know it was an incubator for the next stage of the deception. Cowart built Day Trader Paradise the same way Hollywood built cities. Convincing from a distance, but walk too close, and you realize the buildings are just cardboard walls. His success stories, scripted by mods. His growth, boosted by burner accounts. His community engagement, handcrafted illusions. His lifestyle, funded by his girlfriend and not the market. The only thing trading successfully was his ability to trade lies for loyalty. Everything in Day Trader Paradise had one purpose: the branding, the community, the hype, the fake accounts, the girlfriend's connections, the controlled messaging, the NDAs, the curated illusion of success. Paradise was a production set, a stage play, a place where every actor knew their line, every screenshot had a filter, and every win was strategically placed in front of investors. And the play had one ultimate goal: convince them that John Matthew Cowart was a trading prodigy worth funding. And when the audience believed
Definitely not a trading prodigy.
when the dream felt real enough to touch, That's when he unveiled the next act. The hedge fund. Because Paradise...
This is what I heard rumors of. I'm curious what they're going to say, but I heard rumors that he had a hedge fund a couple of years ago, basically talked these lawyers into it, and then he just blew out the hedge fund, and then yet he still talks about how he's like this amazing trader. But I don't mean, like, I want to clarify. What I heard was he didn't take losses. Like, he blew it out.
It was never the destination. It was the bait.
The 405,000 fund built on faith, destroyed by reality. So
Every
did he
fraud
blow it
has
out?
an inflection point, a moment when the story stops being marketing and becomes a crime scene. For John Matthew Coward, that moment came the day he asked his followers for something new. Not attention, not loyalty, not engagement.
He had a girlfriend. Hearing him talk earlier, my gaydar went off.
Not to buy his products, money. And that's completely different than buying someone's products or services, let's be clear. After months of building trust inside day trader paradise, faking wins, staging testimonials, and rehearsing success like a community theater production, Coward decided it was time to evolve. He told his members he was taking things to the next level. A fund, a hedge fund, a professional operation. It's always the guys losing on paper accounts who wake up one morning and decide they're Ray Dalio. But the pitch worked because it didn't start cold. It wasn't some random guy on the internet yelling about opportunity. It was their leader. The guru from Paradise, the guy with the community, the guy with the testimonials, the guy who seems successful enough to trust. Stagecraft is powerful. Illusions are persuasive. And Coward understood both better than trading.
That is true.
If
Everyone
Day Trader
wants
Paradise
there to
was
be
the
an
funnel,
easy way to financial freedom.
his girlfriend was the siphon. A paralegal connected to attorneys who unknowingly became the bridge between the fantasy and the funding. He used her professional network like a fishing net, hooked attorneys,
No, he's just a
told
douchebag.
investors, sold them the story. One attorney described the whole thing as desperate. Coward rushing, persuading,
He
promising
screams
them that
desperate.
this fund was backed by his growing subscription empire. A subscription empire he was charging $700 a month for that may or may not have been paying for his groceries at the time. Another guy pimping his girlfriend out all for the end goal, just to be success, status, and money, which he inevitably loses. Now, who does that sound like? Ironically enough, that sounds exactly like Matthew Smith, also known as What's the Dirt?
I don't know who that is.
Now wait a damn minute. What's with all of these Matthews screwing people over? We got Matt from the
Just
prop firm
ruining a
Top One
good name.
Futures, scamming their traders. Then we got Matthew Smith, also
Oh,
known as
God.
What's the Dirt, scamming farmers out of money and product. Then we have Trades by Matt, or should we say John? Nah, you wanted to be Trades by Matt so bad. So now you get to join the Matthew Club of manipulating
Uh-oh.
users. It isn't
Uh-oh.
a coincidence
This is
that all
getting
of y'all
personal.
have a history of manipulating women. On paper, it looked official. Coward Trading, LLC. Filed with the SEC. Classified as a hedge fund. $405,250 raised, 15 individual investors. This wasn't a
Did he
handful
blow
of
it out?
donations. This was capital, serious capital. Capital that requires compliance, custody, auditing, and oversight. Coward had none of those. He ran a hedge fund the same way teenagers run Minecraft servers. Zero security, zero rules, zero supervision. Between March and May 2020, the wires came in like clockwork. $50,000, $25,000, $10,000, $20,000. Some wired through Day Trader Paradise LLC. Some through Coward Trading LLC. Some directly to him.
Isn't
It
that
was all blending
illegal?
together.
Isn't that...
Bank accounts, corporate entities, investor money. A level of commingling so reckless, it would give an accountant seasonal depression. Once the money was in, the strategy became clear. Trade until something works. Then trade harder when it doesn't. Then deposit more money. And repeat the cycle until God intervenes. And the performance sheet proves it. The fund didn't decline. It imploded. 94.39% total destruction.
No way. Funds net gain, a loss of 94%. Total deposits, $435,000. Net P&L of fund. Wow. He blew out 94% of other people's money.
Negative 109.46% trading account loss. Over 435.
How did he do? So, he was just reckless. So it started 435 or 400. So just looking at how it went, he was completely reckless. 376, 394, 434, 558, 538. He's just taking huge swings, massive swings. Oh, and check this out. So in June, he was at 413, July, 292, by mid-July, down to 68. So from end of June, June 26th to July 17th, he lost $400,000. Not really catching the hedge part of the hedge fund name.
$5,000 vaporized.
Oh, and then he got someone else to buy him by $40,000. Dude, this guy got goosed on the bottom of the screen. So right here, January, he was at $68. He got someone to throw in another $40,000 to try to save it.
Net liquidation value dropped to $68.30. All in 3 months. The weekly
That's
spreadsheets
crazy. That sucker
vanished. No more updates. No more explanations. Just silence. Investors waited for clarity. Coward waited for them to shut up. The losses weren't just catastrophic.
Wow.
They were irreversible.
Blew out half.
With the fund in
$1
ruins and investors staring at financial scorched earth, Coward did what serial frauds always do. He reinvented himself, left day trader paradise behind, abandoned Coward trading, buried the fund collapse. So he could emerge with a new identity and pretend none of this ever happened. He didn't just lose their money. He shed his past like a snake, molting in slow motion. Day trader paradise built the trust.
These edits are
the
good.
fund cashed
I know
in.
I've said that. They just aren't.
And when the dust settled, only one man walked away unscathed. Because the next chapter of his life wasn't about fixing the damage. It was about outrunning it.
Oh, is this when he became Rocket Scooter? Blow out one fund, switch your name, move on.
Hold up. Quick message from HQ. The Nightmare Syndicate is officially open, and this is where things get interesting. Inside the syndicate, you can submit
IWM
names,
new
evidence,
all-time high.
anonymous tips, and help shape the next wave of investigations. But that's just phase one. We're rolling out giveaways, merch drops, cash givebacks, the Patreon launch, and eventually, our full Nightmare Network application. Step by step, brick by brick, you're about to watch us build something this industry has never seen. If you want to be early, join the Nightmare Syndicate. Link will be pinned in the comments.
The Nightmare Syndicate. Damn, a few months ago, those were rookie
Every
numbers.
scammer
I could
has a
lose everyone's
vanishing
money
point.
so much faster.
A moment when the heat gets too close, the questions get too sharp, and the truth starts leaking through the cracks. For our frequent guests of the show, Danny DeLito and Pastor Jacob, after their $147 million scheme with the funded futures family was
yeah, that was
exposed,
bad.
they both parted ways from that garbage fire. Prophet Wieland, Guru Leaks put belt to ass, and he ain't never been the same. Tory Trades? Do I even need to say? As a matter of fact, I can't because that's still an open case. But as for John Matthew Cowart, that moment was July 2020. $400,000 gone, 15 investors ghosted, spreadsheets stopped, phone calls unanswered, paradise burned to ash. And what did he do next? What any response?
You would think tactically screwing over lawyers is the worst group of people to screw over, because wouldn't they just then sue you?
Responsible adult would do, of course. He changed his name and started a YouTube channel. The instant the fund collapsed, Cowart treated day trader paradise like a disposable coffee cup. One flick of the wrist, gone, never mentioned again. No refunds, no apologies, not even a my bad, just silence and the faint sound of a man Googling how to reinvent yourself in 3 easy steps. Then came the next act of the magic trick. Rocket Scooter Inc., a sleek name, a fresh Delaware corporation.
Of
brand
course,
with
in
no
Delaware.
baggage, at least until the lawsuit hit. He appointed himself CEO and director, like a kid choosing his own superhero name. It didn't matter that Rocket Scooter had the same man behind the wheel, the same debt, the same trading record, the same history of catastrophic losses. He wasn't reinventing the business. He was burying the evidence. But the real transformation happened in the public eye.
Switch your
One
name.
day, John Matthew Cowart
Erase your digital
vanished.
footprint.
The next, a new face appeared, Trades by Matt. He didn't just rebrand, he laundered his reputation. No mention of Day Trader Paradise, the catastrophic fund, the minus 109% trading account, the investors wiped out, the legal trail behind him, just a clean slate, a new persona, a new identity for public consumption. The choice of name wasn't an accident. There was already another trader known as Trades by Matt,
Yeah,
with
that's
years
who I
of
know of.
search engine footprint. Cowart hijacked the name like a digital identity thief, hoping to blend in with the algorithmic crowd and siphon off legitimacy. He didn't rise through
Devious
the ranks.
move.
He photoshopped himself into the group picture. People rebrand businesses to evolve. Cowart rebranded himself to disappear. You don't create a new persona, a new company, a new online identity, a new narrative, unless the old one is radioactive. And his was. This wasn't marketing. It was survival. Cowart didn't rebuild his reputation. He escaped it. And once he became Trades by Matt, the lies weren't behind him. They were repackaged, upgraded, and sold again to a fresh audience.
We serve legacy memes.
Some stories end with justice, some end with redemption. But every now and then, you find a story that ends exactly where it was always heading. John Matthew Cowart didn't fall from grace. He never climbed high enough for that. He lied his way into day trader paradise. He charmed his way into a hedge fund. He disappeared into a rebrand. And every chapter, every shell company, every alias, every pivot told the same story. A man running from the truth, faster than he ever ran toward accountability. Based on the evidence, the patterns, the rebrands, the catastrophic losses, the fake personas, the vanished investors, and the mountain of debt growing like mold behind his ears. John Matthew Cowart is not a trading expert, not a mentor, not a visionary entrepreneur. He is and
He's
always
kind of
has
just
been
creepy, dude.
a cautionary tale wearing a fresh coat of paint.
Like, if you look at him, if you hear him
built a
talk,
paradise to
he's a
lure
creepy guy.
He built a
There's
hedge
no better
fund
way to
on
explain it.
faith
Honestly, go check him out. You're gonna
And
be
he
like, yeah,
burned both
that's a
down.
creepy dude.
and walked away from the ashes like they were someone else's problem. The only thing he consistently generated was new victims. He hasn't stopped. He hasn't changed. He hasn't paid what he owes. He just changed the mask because predators don't retire. They rebrand. So here's my verdict. John Matthew Cowart, also known as Trades by Matt, also known as whatever the fuck mask he puts on next. You are guilty of financial negligence, guilty of deception, guilty of identity laundering, and guilty of wasting more money than most people will ever touch in their lifetime. Your entire career is a lighthouse. For anyone who still believes, marketing can replace math. To the viewers, when someone loses $405,000 in 3 months, don't subscribe to the
They really
newsletter.
did it in like 2 weeks.
When someone rebrands every time the truth catches up, stop following them. And when someone tells you they became a profitable trader in 2015, while living off their girlfriend in a Houston apartment. Close the tab.
The old living off the girlfriend tactic.
And remember, the Nightmare Network is always watching.
Wow. Once again, the Shell King, how Rocket Scooter AI built a scam empire and blew it up. It was posted by the internet's boogeyman. Obviously, I did not make this content, so I would recommend following and liking and subscribing the internet. Once again, the internet's boogeyman. Show him a little bit of love. Someone sent this to me, said I had to watch it. I figured it'd be fun to react with all of you folks. It is, I mean, I heard, well, I didn't hear anything about him, and then he got on my radar when he, for some reason, wanted to trade against me. But why would I do that? He's a nobody. And then from there, I did a little bit of research into him. And there's certain people, when you're in this world a little bit, there's certain people who it's just so evident what's going on that, oh, like it's just a marketing thing. You're selling a dream BS. And then people started to reach out and said like, no, it's actually like kind of deeper than you would anticipate. And I heard about the hedge fund he blew up. I didn't know the exact details of it. And actually I've heard about other things that aren't in that video. So I don't know if they're true or not, obviously. But I've heard even worse things. But all I can really say is the hedge fund stuff seems crazy. Clearly this guy is not a quality trader. But like more concerning than all of that is the dude is just like a creepy dude. Like I'm telling you, I think as a human, we have this like sixth sense of just like kind of creepy people. And if you don't believe me, like just go fact check me. Go watch that guy for a second. You're gonna be like, yeah, no, I get it. It's just like it's a creepy vibe. Interesting stuff. Very, very interesting. Well, anyway, folks. We kind of stayed over a little bit today. I appreciate you watching that video with me. Yeah, BTC on a little bit of a ride. I see that. The Russell did hit a new all-time high. We got a little bit of a pullback there in the SPY, a baby one here in the Qs. I wonder if we're going to pop up in the lunch session or maybe a little bit later on. But I'm definitely watching this flow. The Mag 7 pop, pulling back a little bit. S&P 500. That one was the questionable one this morning. Okay, so there was a big flow alert there at 10:16, giving a bit back. But let's see how this all really plays out, team. Let's see how this all really plays out today. I wonder if that's just going to keep going. Bullish, 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 bullish. That's even a nice breakout. That is a nice breakout. Well, seems like in the short term, the bulls are in control. In terms of key levels, I'm looking for a hold to 60, and then from there, push to 80, followed by 90, followed by 6,900 flat. Right now, like I said, in the short term, as a day trader, as a scalp trader, personally, I'd be looking for bullish opportunities, but more important than the direction you pick is obviously sticking to your risk management and using proper sizing. Folks, that's what I have for you. I appreciate all the good vibes today. We're going to be posting some update stuff later on today. And then tomorrow's the big day where we're doing 2 streams, the normal 9 a.m. one for market open. And then we're going to be doing the specialty FOMC one tomorrow afternoon. So get ready for that. The name of the game today is hopefully make a little bit of money, hopefully kind of just survive until whatever the chaos is about to ensue tomorrow. That's what I have for you folks. Like I said, thanks for all the good vibes. I will catch you on the flippity flip. Remember, today's the last day for Apex. And then if you want Spot Gamma, which is where we check that flow, that's also currently pinned to the top of chat. Thank you. Hope you make a buttload of money, and I'll catch you guys later on. Peace.